the goal that Nordstrom is going for. So if that works, I think the investment will pay off. But the biggest investment Nordstrom has ever made in this store.
And the share's down 50% from their 52-week high. They've got a lot of climbing back to do. Guys, thanks. Appreciate it. Jen Niff and Courtney Reagan with the newest store opening there. That does it for the exchange today. I'll go join Tyler and Melissa for Power Lunch, which starts now.
Okay, now I can talk. They gave me the signal. Welcome, everybody, and Kelly, we'll see you in a minute. Welcome to Power Lunch. I'm Tyler Matheson, and let's tell you what's new at 2. I wonder what this is. You ever wonder what that is? It's the first time I've ever really seen it. It looks like the... Oh, that's... I thought it was the grill of an automobile. Maybe a Lincoln. Earnings buffet, ladies and gentlemen, on the busiest day of earnings season. 3M is sinking, Twitter is tanking, and Tesla is surging. Plus, we are gearing up for behemoth Amazon after the bell. Plus, Tesla is not the only stock revving up. Car dealer Group 1 Auto soaring to record highs after its earnings report. The CEO will be here to break down what's driving profits. Will come to us from Houston, which is down 2-0 in the World Series, said the boy from Washington. And later, the WeWork water cooler tensions are high for employees. With thousands of layoffs coming, many might be heading for the exits with empty pockets. We've got the details on that as Power Lunch starts right now.
Welcome to Power Lunch. I'm Melissa Lee. A mixed bag we've got here for the markets thanks to earnings. The Dow right now is in the red. The S&P 500 as well. The Nasdaq is the only one that is higher right now by just about 0.5%. And take a look at what is driving the divergence. The Dow held back by 3M, while the Nasdaq getting a boost from the likes of Microsoft and Tesla. Wow, look at that, up 17%. We'll dig into all those moves. Kelly.
All right, Melissa, thank you. First, Vice President Mike Pence with some harsh words for China and for some of the companies doing business there. Kayla Tausche has the story. Kayla?
Kelly, it was a highly anticipated speech after being twice delayed due to developments on trade. It was a hawkish speech, but the vice president tried to deliver a delicate message this time, that the U.S. maintains an adversarial view of China, its economy, and its actions overseas, even though Washington wants to keep engaging.
America is reaching out our hand to China. And we hope that soon, Beijing will reach back, this time with deeds, not words, and with renewed respect for America.
In critiquing China's restraints on civil liberties and democracy, Pence also took a swipe at Nike and the NBA.
In siding with the Chinese Communist Party and silencing free speech, the NBA is acting like a wholly owned subsidiary of that authoritarian regime.
The vice president said the U.S. stands with demonstrators in Hong Kong. That's the first time the administration has said that, with President Trump long saying the issue is China's to handle. Tyler, it was an interesting speech in that the vice president seemed to be playing bad cop in this relationship, even as trade talks and a potential trade deal signing are just weeks away.
You know, you make a very good point here at the last part of what you said. This is the first time that the administration has come out in a kind of more full-throated way, critical of the way China has been dealing with Hong Kong, the very thing that they were that the administration was criticizing the NBA for doing.
Exactly, Tyler. And this had been a view that the vice president was expected to be delivering for months. This censure on China's human rights record, its civil liberties record, and the escalation of the situation in Hong Kong and the ensnaring of a lot of American brands in that process gave the vice president quite a bit more fodder to use in this speech, and specifically a dig at Nike, saying that the company is a so-called social activist, and that seemed to be a play toward the president's base, where he has often criticized Nike as well.
All right, Kayla Tausche, thank you very much. And today is the busiest day of earnings season of all, with 46 S&P 500 companies set to report. And we are seeing a big divide between the winners and the sinners. For more on how to digest this earnings buffet, let's bring in our own Bob Pisani and CNBC Fast Money trader Steve Grasso. Bob, let's kick it off with you. The season so far has been pretty good, really. I mean, the number of beats is running roughly where it usually does, maybe even a little above.
That's right. About 83% of the companies are beating. That's typical. 14% are missing, and that's typical as well. But there's been some high-profile misses. And, Steve, one of the things that I really notice is there's a theme to these misses or the ones that are providing poor guidance. If you're in automotive business internationally, if you're in industrial business internationally, and if you have heavy presence in China, you're probably providing some disappointing guidance. We saw this from 3M, Stanley Black & Decker, right, Ford, Caterpillar, even Texas Instruments.
Right. So you have everything that was looking not so forward to trade issues that has taken it a little bit on the chin. But if you look at these earnings, they're all backward looking. Aren't earnings a lagging indicator when you look at the economy? So if things are getting better, you're not going to see it there. But what is better and what has been good is the consumer.
Yeah, and Capital One after the close.
Right.
What else? Visa's going to be after the close. We're going to hear great things from them. But the fintech has been the big movers this year. Right. Visa's had an astonishing year. MasterCard had an astonishing year. Is it going to get even better?
So if you look at where people look for growth, they're looking for technology, and they want a reason to dive back into technology, and they want a reason to think about where growth is going to be coming from. You need tech to perform. You need any kind of tech to perform, whether it's software, whether it's hardware, whether it's consumer facing. So yes, I think it has to get better by its nature for the market to move higher.
Yeah, technology's been strong. We saw, though, Texas Instruments, big exposure to China, big exposure to autos in the semiconductor space. They had problems. Lam Research today, which does have some exposure, did very well, right, though. So it's still not an entirely clear picture here. Not automatically bad news if you have exposure to China.
So I think the way you have to look at this, I make it easier for myself with revolving around investment. Recession fears have lessened. Earnings are doing better, or at least on average the same as they've always been doing. The Powell issue has lessened. So across the board, things are looking better than they did a month ago.
Yeah. I think the key here, Tyler, recession is kind of off the table. Looks more like slow growth in 2020 than recession talk. Back to you.
Slow growth, but growth nonetheless. Bob Bazzani, Steve Grasso, thanks.
And now to the disaster du jour, Twitter tanking following a big earnings miss. The social media giant blaming a glitch in its advertising technology and warning shareholders to expect headwinds through the year and possibly into 2020. But user growth did take off. Take a listen to Twitter CFO Ned Siegel earlier today on Squawk Box.
There are a few things from this quarter. The first is that DAU growth that you mentioned. MDAU grew 17% this quarter. We broke out of this range that we've been in of 9 to 15%. We accelerated our DAU growth for the third quarter in a row. This is driven by real product improvements that we've made over a series of quarters. We look at all of this as a validation of our strategy.
Let's bring in our own Julia Borsten and Michael Levine, senior research analyst with Pivotal Research. He lowered his price target on Twitter from 47 to 35, but maintained his buy rating on the stock. Julia, I'll start off with you, and I want to go into the map bug and how long you think this could be a headwind for this company.
Well, I think what's so interesting here is this map bug, as they're calling it. This is a technical glitch that minimized Twitter's ability to target advertising and then also report back how well those ads were doing to advertisers, which is obviously key. Everyone cares about measurement and targeting. It didn't affect everyone, and the effects, it sounds like, should be somewhat limited because they're starting to fix it. But in a quarter where they managed to grow users so much better than expected, they added twice as many new users in the quarter than projected. This was a quarter where they should have been able to also show better advertising growth. And to see advertising slow down, the question now is, was this really a glitch that they can limit to 1 or 2 quarters of impact, or is there some bigger challenge to their advertising business?
Michael, there supposedly is going to be a launch of a new version in 2020, and I'm wondering, in your view, if this is going to be a permanent headwind towards advertising revenue, or if this is a fixable problem.
I don't think it's permanent, which is why we stuck with our buy rating on the stock. I mean, per our PAI, our Pivotal Advertising Insights product, we actually had picked up, we thought there was going to be weakness in the U.S., both in the third quarter and fourth quarter, so we actually had cut our estimates about a week and a half ago. So it didn't catch us as much by surprise. I think the street was very much caught off guard. I think what did surprise us, and I suspect because the Japan market is so heavily exposed to map and application downloads, like that actually had contracted, and the comps get significantly easier. So my gut says this is probably more temporal. Where I think it's a challenge for the stock is you basically got an overt lower for the fourth quarter. you know that, as they talked about on the call, they're going to have headwinds in the front half of the year. You sort of don't know when this gets fixed. I think the company has done a laudable job turning user growth around. I think that they should see even better user growth next year around the elections and the Japan Olympics. But your next catalyst is getting Q4 earnings, the Q1 revenue guide, where my suspicion is you'll probably see a pretty broad dispersion of revenue numbers, and they're going to guide OPEX for the full year. So your next update may be another estimate revision lower. I think that's a challenge for the stock.
You totally hit on two things that were on my sort of uninformed mind, and that is, one, it's a political year, and you'd think Twitter is going to be the platform where everybody's going to want to play, and the Olympics. But it feels like this, Julia, Michael, you tell me, is going to be a real show-me kind of stock. Michael?
100% agree with you. I do agree with you.
Yeah.
But I mean, look, I'm chartered not with what's the stock going to do over the next 2 months. I mean, gun to head, my guess is it probably doesn't work well. But, to form a view that's based on a 12, 18-month view of the company. So I think this will basically get righted. But we're not talking about Facebook. We're not talking about Google, Amazon, where they build credibility over a course of multiple years around things like OPEX. And, it's for a company like Twitter, you probably have got some rebuilding and some faith that needs to get reestablished.
Last word is yours, Julia.
This shortfall was so unexpected because this story has been very different for Twitter. For so long, it was all about the user growth. Can they grow users? Can they grow users? They started to grow users. They showed that they had an advertising business that worked. So that's why, to show that they were both growing users and disappointing on advertising was such a discrepancy from expectations and such a surprise. We'll see about Q4.
So it came out of nowhere, right? I mean, basically.
All right. Julia, thank you. And our thanks to Michael Levine as well.
And now to the big earnings report after the bell, just a couple hours from now. Q3 results from Amazon will feature sales from Prime Day, where sales surpassed both Black Friday and Cyber Monday combined. The company is expected to show more signs of growth after it's spent over $800 million in speedier delivery the last couple of quarters as well. But how much will that eat into potential profits? Joining us to talk about the stock now is Daniel Kurnos, Managing Director at Benchmark Company. He has an outperform rating on Amazon with a $2,300 price target. Daniel, we just talked about Twitter tanking. Can Amazon turn things around?
Well, look, it's funny in Q3 going into the ever important holiday quarter that we're talking about operating income here. Obviously, the build out that we saw in 16, 17 DC warehouse build out took a lot longer than anticipated. And the focal point is clearly in Q3 and Q4 on operating income, not on revenue. I do think we'll have a very strong revenue result from the aforementioned Prime Day in Q3. Be interesting to see what they talk about in Q4 revenue, especially with the one less week of shopping this year, one less weekend between Thanksgiving and Christmas. But yes, the clear focal point is on operating income in the short term.
So speaking of operating income, the Journal has a big story today about Amazon selling Bangladeshi products on its site that other retailers had blackballed after that horrible fire a few years ago. Bottom line, if Amazon says, as one of its consumer chiefs has said that even this week, that it's going to have to spend billions basically policing its site better, how does that affect your operating income forecast from here on out?
I mean, look, Amazon is such a behemoth, right? They spend billions of dollars every year making sure that they have top quality stuff so they don't have issues with counterfeiting or poorly sourced products. I think that that's just part and parcel of who they are. That wouldn't really impact my operating income forecast more than, what I think they'll spend on building out fleets and one-day delivery. That's really going to be the bus driver here.
Yeah, cost is always the main focal point for a company like an Amazon, the cost of building out that infrastructure. Daniel, you have in your forecast, you're expecting lower costs for the quarter. Why is that compared to your colleagues on the street?
I think that there might be some flow through from revenue. I'm a little bit higher than my colleagues on revenue. So, perhaps on an absolute dollar basis, I am actually below the street by a little bit on my operating income, I believe, in the quarter. Q4, we might be a little bit higher, and granted, with the product refresh that they just have, plus, as I said, the same day delivery build out, that could obviously push it a little bit lower. But I think longer term, my view is a little bit different. I think that because they spent so much money building out that infrastructure years ago, I don't know that the build out will take as long as it took years ago, in which case you might see that sort of pivot point back towards improved profit maybe as early as the second half of next year. And I think that would be a very welcome story along with a reaccelerated top line.
All right. Daniel, thanks.
Thank you very much.
Daniel Kurnos.
Coming up, you thought this was peak auto. Check out the shares of Group 1 Automotive, up 10% today. New record high, and now nearly 100% higher on the year. Up next, the company's CEO, Earl Hesterberg, will join us, and we will get a read on the consumer from the CEO as well of the Kimco Realty Group, big shopping center REIT. But first, Tesla shares soaring on pace for the best day in 6 years, if you can believe it. Shocking the street with a profit. Does Elon Musk have his mojo back? Stay with Power Lunch.
This CNBC program is sponsored by...
Teaching shapes lives. If you're thinking of becoming a teacher, our expert teaching advisors can give you the level of support you need to get one step closer to the classroom. Teaching. Every lesson shapes a life. Search Get Into Teaching. Advisor support subject to eligibility.
Fall in love with the brand new iPhone 11 at Tesco Mobile. Take amazing photos with Apple's best ever ultra-wide lens camera. You can get the iPhone 11 for just $37.75 a month with no additional upfront costs. What's not to love? Search Tesco Mobile or visit us in store. Tesco Mobile. Every little helps.
36-month credit agreement, rolling monthly usage contract. Subject to status, phase policy applies. See tescomobile.com/terms.
Chase the sun with TUI to over 40 long-haul destinations. Explore the beautiful beaches of Jamaica, sip margaritas in Mexico, or see the many wonders of Asia. And until the 26th of October, enjoy £150 off per booking. When you fly with us, we'll take you there on one of our state-of-the-art Dreamliner planes. TUI, we cross the T's, dot the I's, and put you in the middle. T's and C's apply. Minimum spend £1,200 and available on selected holidays. See website for details. Atoll protected.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want comedy, coming up, way better than the dad jokes in this house. Horrors, no problem. It's not real, it's not real, it's not real. Or how about football? I've got the Premier League. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto renew, terms apply.
The B&Q 3 for 2 offer is now on, including an unmissable 3 for 2 on tiles and flooring, like real wood and laminate. So hurry to B&Q. You can do it when you're 3 for 2 it. Excludes cut to measure flooring, flooring accessories and underlay. Every third item per single transaction in descending price order free. Offer ends November 3rd, cpoy.com.
No one wants to get caught in the cold in London. We're with you. So our boilers come with 2 years interest-free credit to avoid a big chill to your wallet. You'll get a 5-year British Gas warranty. And now we can even quote by video call after work or weekends at a time that suits you. Get a quote by the 30th of November and get £150 off a new boiler or £450 off for existing home care customers. Search British Gas New Boiler. Conditions apply.
Tesla shares are soaring today, shocking Wall Street with a surprise profit. Phil LeBeau joins us to break all the numbers down. Phil.
Melissa, a trio of reasons of why Tesla posted this profit. And by the way, most analysts were expecting them to post a loss for the third quarter. But 3 things that many of them were not fully counting on, or maybe they were counting on some of them, but not all of them. First of all, lower operational expenses, higher gross automotive margins, and deferred revenue from Smart Summon and other advanced driver systems that Tesla has been charging customers for. And as they roll those suite of features out, then they are saying, well, we're going to recognize that deferred revenue. Tesla shares having their best day since March. And there were some questions on the call about the new Gigafactory in China and where things stand there. Here's Elon Musk on the call.
Shanghai will become our template for future growth. We're planning to build Model Ys in Shanghai as well, of course, and to build a Gigafactory in Europe. And we hope to announce the location of that Gigafactory. In fact, we will announce the location of that Gigafactory before the end of this year.
We've got more Tesla coverage for you tomorrow morning on Squawk Box. You do not want to miss the interview with Chairman Robin Denholm. This is a chance for us to really hear from her the first time since she's taken the chairman position at Tesla. Remember, Elon Musk was stripped of that title after all the issues he ran into on social media and with the SEC. So, guys, you don't want to miss that interview tomorrow morning on Squawk Box.
All right, Phil, thank you very much. Phil LeBeau in Chicago. Tesla not the only auto stock riding high today. Shares of Group 1 Auto accelerated to record highs today. On the back of a very strong third quarter, the stock has now nearly doubled this year so far. This morning, the car retailer reported record quarterly revenue of $3.1 billion. That's a 7.9% increase year over year, powered by strong growth in used vehicle sales, up nearly 9% from the same quarter a year ago. Joining us now, returning for a Power Lunch exclusive, is Group 1 Automotive President and CEO Earl Hesterberg. Mr. Hesterberg, welcome back. Good to have you with us.
Thank you.
How do you squeeze 8-9% growth out of an overall market that is basically flat, 1% or so, and in many ways is declining in sales?
Yeah, well, actually, we've just kind of rolled with the market, which is a stronger used car market than a new car market right now. And there's a lot of supply and a lot of good value in used cars, so we've rolled with that punch. And then also, we put a lot of emphasis for more than a year now on parts and service. And, you know, there's a big universe of units in operation out there for our brand. So we drove this quarter with strong used car sales and parts and service sales.
Why are used cars so hot, and where are the used cars coming from? Are they off-lease cars or what?
Yeah, off-lease is the primary increase in supply. But, you know, new vehicle sales have held up pretty well, and so trade-ins are a big source for us. And the more used cars you sell, the more trade-ins you get. So it's all kind of a cycle. But I would say the off-lease cars are probably what's really different from the market this year compared to 2 or 3 years ago.
Are sedans dead?
Not completely, but 68% of our sales are truck and SUV, and it keeps growing. But, you know, there are still some brands that do a lot of sedan business, Honda, Toyota. So it's not completely dead, but the market demand is clearly shifting toward truck and SUV and crossover.
Earl, does that shift to used cars and parts and services, does that tell you anything about the health of the U.S. consumer or the economy?
Well, I think it shows a little more inclination toward value seeking. All right. The price of new cars has gone up. Some people are keeping their cars longer, and some see used cars as a better relative value. So, yeah, there might be a subtle message in there of a little more value-conscious market.
Earl, I wonder, Greg Gipp has a piece in the Journal today where he talks about peak car and automotive weakness for the new car sales obviously come up, and everything from 3M's earnings miss today to Germany's GDP slowdown and near recession. Is it true possibly that U.S. new car sales are topping out? And even if so, how strong do you think the used market and the dealer model can continue to be?
Well, the new vehicle sales actually peaked out about 2 years ago at 17.5 million, and we've been kind of vacillating around 17 million since. For this recent quarter, the retail market was actually up a couple percent, and our new vehicle retail sales were up 2.9% as a company this quarter. But yeah, the new car market is softer than it was 2 years ago, but on a historic basis, it's still quite strong. And our business model is somewhat diversified, and with used cars and parts and service. So I think with people working and low interest rates, the auto market's going to stay pretty good, I think, for at least for the near term.
Earl, thank you very much. It's always good to see you. Thank you for checking in.
My pleasure.
Appreciate it.
Checking on markets, the Dow falling a little bit today, but all three averages are within reach of their all-time highs. So which of those 11 sectors should you ride for the next leg of the rally? Our traders will give us their picks. Plus, the Popeyes chicken sandwich is a job creator. We'll explain the boom created by the phenomenon coming up on Power Lunch.
A pair of jeans that fit just right, and a radio world, but like to see.
Can I find an investment?
Hello, I'm Maisie Adam, and you're about to listen to a set performed by me at the Cavendish Comedy Club in London. Oh, I'm terrible with my money. I am. I'm absolutely terrible. Like I can't play Monopoly because it hits too close to home. Honestly, because what it is just going around London going, can't afford that, can't afford that. I've got nothing in the bank, and I can only dream of winning 50 quid in a beauty contest. You might
might think you're terrible with money, but here's something. Did you know it's easier to save if you do it the day you're paid? Payday Save Day. Building a society of savers nationwide.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hearing is an underrated miracle. Intimate whispers, the lushness of symphonies, the soothing patter of rain on leaves. If you had that taken away from you, it would be a massive loss for most of us. Almost all of us go every day without really stopping to think about just how important it is to us.
Audible presents The Body, a guide for occupants, written and read by Bill Bryson, including original bonus material exclusively available at Audible. Listen free as part of your 30-day trial, $7.99 a month after 30 days, renews automatically.
You're a small business owner and there's nothing small about what you do. That's why Dell Small Business Technology Advisors give you trusted advice and tailored tech solutions, like computers with Intel Core processors, servers, storage and networking, plus industry-leading monitors and software. No matter your technology needs, Dell is here to help your small business do big things. Call 0800 085 4878 to speak with an advisor today. That's 0800 085 4878.
Welcome back to Power Lunch. I'm Mike Santoli at the New York Stock Exchange. Stocks still inching toward record highs with the busiest day of earnings season underway. So which sector could be the next to break out? Todd Gordon of TradingAnalysis.com and John Petrides of Tocqueville Asset Management are your Trading Nation team today. Todd, you got 11 sectors to choose from. Which one seems set up the best to you?
Michael, I like communications the most here. We're seeing a rotation into XLC. We've already seen the move in technology. I think that communications is the sleeper. We have that top 10 holdings in XLC in terms of reports. 2 of them are out, right? Netflix came out, and we had Comcast already report earnings were solid. The other 8 to go. We have Google, we have Facebook, we've got Activision, AT&T, all the charts. If you go through those top 10, I think all the charts look good. I like XLC as sort of a catch-up trade to what technology has already done. So if we look at the chart right now, you can see, much like this overall market, we've been in a lot of consolidation, a lot of back and forth, higher lows, lower highs, a lot of frustration. I do think this consolidation resolves in the direction of the trend which is in place prior right here, which should be up. So through about 52, watch that XLC. I hold the stock myself. One trade, if you want to play one of the biggest holdings, Alphabet. Earnings are coming out on the 28th. Again, very similar pattern here. Really just the stone's throw away from all-time high to about 1250. When you try once, twice, 3, 4 times to get through a level, there's a chance that the buyers are going to take us through. You can look to play Google as well.
Yeah, a lot of those charts look like they're trying to crack the ceiling. John, would you be looking for some of the leading sectors or maybe trying to bet on a laggard to catch up?
Yeah, I think over the next 12 months, the energy sector could be one of the better performing or outperforming in the S&P. I mean, it's less than 5% of the overall index, which is unbelievable to think where we were 10 years ago. And if you look at the larger cap E&P in particular, I think are the most attractive here. You know, assuming we get a deal with China, you're seeing production slow down, which should hopefully tighten the supply-demand dynamic. And post the 2016 collapse in oil prices, most of these energy companies have become really good capital allocators, focusing on repairing the balance sheet and returning cash to shareholders. So I think at current value, the energy sector is under-owned, and I think there's a lot of catalysts to drive to the upside, not to mention the geopolitical risk going on in the Middle East, which I don't think is properly being reflected in stock prices today.
All right, a little bit of a contrarian call. We'll check in a year later, see how it goes. John and Todd, thank you very much for joining us today. For more Trading Nation, head to our website or follow us on Twitter at Trading Nation. Melissa, back over to you.
Mike, thank you. Ahead on Power Lunch, WeWork's deal with SoftBank could be great news for co-founder Adam Newman, but bad news for, well, almost every other employee. We will explain next. Plus, a retail reality check. The CEO of shopping center operator Kimco Realty will join us live to discuss the state of the consumer and why the return of Popeye's popular chicken sandwich could help spice up the jobs market. All this when Power Lunch returns.
And now, the latest from tradingnation.cnbc.com and a word from our sponsor.
For entries into breakouts, some traders use buy-stop limit orders placed above resistance levels. Unlike regular buy-stop limits turn into limit orders when the stop is triggered. Thus, if a stock closes below the stop price one day and opens far above the limit price the next, a trader will not buy the stock. I'm Lee Bohl, and Schwab is the better place for traders.
At Wix, right now, there's 15% off our wide range of tiles and flooring, on top of existing offers. In-store and at wix.co.uk. Terms apply.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
Fall in love with the brand new iPhone 11 at Tesco Mobile. Take amazing photos with Apple's best ever ultra-wide lens camera. You can get the iPhone 11 for just $37.75 a month with no additional upfront costs. What's not to love? Search Tesco Mobile or visit us in store. Tesco Mobile. Every little helps.
36-month credit agreement, rolling monthly usage contract. Subject to status, phase policy applies. See tescomobile.com/terms.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want comedy, coming up. Way better than the dad jokes in this house. Documentaries, I got ones about space, sharks, or superstars. Or how about horrors? No problem. It's not real, it's not real, it's not real. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto renew, terms apply.
To succeed in small business, you need technology that runs efficiently. When you partner with a Dell Small Business Technology Advisor, you get advice, one-on-one partnership, and tailored productivity solutions, including computers with Intel Core processors, servers, storage, networking, plus industry-leading monitors and accessories. It's how they help your small business make the most of every minute. To speak with an advisor today, call 0800 085 4878. That's 0800 085 4878.
The B&Q 3 for 2 offer is now on, including an unmissable 3 for 2 on all paint, such as Dulux, Valspar and Farrow & Ball. For this show-stopping deal, hurry to B&Q. You can do it when you're 3 for 2 it. Every third item per single transaction in the send-in price order free. Offer ends November 3rd. See DIY.com.
Welcome back, everybody. I'm Sue Herrera. Here's your CNBC News update at this hour. In Brussels, NATO Secretary General Jens Stoltenberg says he is concerned that ISIS will regain strength in Syria after ISIS prisoners escaped during Turkey's incursion into Syria.
Also, I have stated several times that I am concerned about the risk that the increased violence, the fighting, the instability we have seen can lead to that ISIS fighters who are in prison are able to escape or are set free.
The White House is planning to instruct federal agencies not to renew their subscriptions to the New York Times and Washington Post. This escalating the president's war with the media. Dow Jones reports White House Press Secretary Stephanie Grisham said in an email that it will be a significant cost savings with hundreds of thousands of taxpayer dollars saved. And how about this world record? The question is why? A 9-member team broke their own record of most layered bed of nails. The men lied on top of each other with 4 to 6 inches of nails placed between them as an audience watched. Not to put too fine a point on it, but that looks very painful. I'll send it back to you.
It is going to produce the worst case of prickly heat in history.
Yes, I think it will.
A 9-person case.
Why would you want to do that?
No.
I mean, I know it's the world record, but really?
How about the poor guy at the bottom of the stack? Who wants to be that guy?
Who wants to
carrying someone off a second ago.
I love that woman's reaction.
The woman's reaction is
priceless. Yeah, look at his reaction. Stop.
Oh.
Well, I'm glad they got the record.
Oh my goodness!
Imagine doing that for nothing.
Right? Thank you, guys.
All right, Sue. Thank you, Sue Guerrera. Let's take a check on the markets right now, and we've got the Dow still lower on the session.
How do you follow that?
I don't know. I'm just with a straight face, I guess. Down by 0.2%. S&P 500 as well as the Nasdaq are higher. The Nasdaq's actually this looks like close to session highs of 0.7%. WeWork's co-founder Adam Neumann stands to receive a whopping $1.7 billion payout as part of the company's deal with SoftBank. Good news for Neumann, but bad news for WeWork staff. According to new reports, as many as 4,000 employees could be on the chopping block, and the Wall Street Journal says that they could walk away empty-handed as the company's new valuation is below the grant price for stock awards and options many early employees hold. Here to dive in deeper is Tamara Bellinfanti, corporate governance expert and professor at New York Law School. Also, Henry Blodgett, the CEO of Business Insider. Good to have you both. Tamara, I'll start off with you. This sounds like this goes way back to the very first board that allowed all of this to happen, that the seeds were planted well before this latest round of bad news.
I think that's right. I think what we're seeing is a symbol that things were going wrong from a long time ago, and unclear who dropped the ball or who took their eyes off the road, but something happened. And it's a kind of story where everything that you would not want to have happen to a company, to the board, to management, to the CEO is coming to fruition with WeWork. But it definitely points to something went amiss in corporate governance, whether it be in oversight or in decision making.
Henry, why did early investors allow this to happen? Because to a certain extent, they allowed it to happen. Was it because this was supposed to be a unicorn? Was it because there's so much money to be deployed around the world because interest rates are so low that they had to put it somewhere? And there you go, WeWork, here's my check.
I think that's absolutely right. More than just allowed it to happen. I mean, this was their responsibility as a board, and there's no other way to describe it other than just gross mismanagement. Company, in hindsight, just took an extraordinary risk betting that they could do an IPO at a very high market capitalization, even if investors hadn't just rejected the financials, which they did immediately. It was remarkable. But say the market had weakened, we'd still be in this scenario. So just gross mismanagement all around. And I think ultimately it comes back to the board. The CEO is very charismatic. He's very aggressive. It's the board's job to rein him in.
So, Tamara, the employees who are going to walk away from this company, in many cases with options that they thought were going to be valuable, but now are underwater and maybe will never have value. Hey, listen, we know a little bit about that at GE, by the way, having been owned by them. But what's the possibility of a major legal action against the board, against the CEO, against maybe even SoftBank?
Mm-hmm. So I've been thinking a lot about this. It's hard to see how the current shareholders would take legal action, because to take legal action would honestly to have egg on their face. They were there for this. The potential shareholders, who are the shareholders in the IPO, they're the ones who I think actually did their job in all of this. They're the ones who shone a light and exercised their monitoring and accountability role. But unfortunately, they're not currently shareholders, so they have
no standing. I guess you would say
no legal leg to stand on. So hard to see. Potentially, if you are a current shareholder of maybe a lawsuit for waste, but very hard standard to meet. I mean, you're talking about something that's so outside of the norm. Even for a unicorn, it would be extreme and very hard. So right now, I think for a lot of them, they do own stock. So maybe tender into SoftBank's tender offer and try to save and salvage what you can. And let's not forget that earlier this year, WeWork did lay off a number of employees. So the employees that are left actually survived that initial round of layoffs. And they too probably saw some of the writings on the wall.
Henry, do you think that investors, early investors, whether it be PE or VC firms, will have learned from this example?
I think so. This is extreme. This is SoftBank, which has always been incredibly aggressive, and I'm sure they have learned lessons internally that they need to be much more disciplined about what they're doing. But in every cycle, you get companies like this where for many, many years, it is the most aggressive and the most hyperbolic and the most charismatic companies seem to win over and over again. So everyone begins to jump in on that. But then you have a case like this where
the source of the problem, though, Henry, seems the source of the problem seems that there was this, dual class structure or super voting class where Adam Newman owned the whole company, basically controlled the company and was in there, and they later had to be bought out. I mean, that's why he has this big payout. And so do you really think that investors will learn to the point where they'll say no more with this dual class nonsense? I don't know.
I don't know about that. I mean, I think that, this wave of companies over the past 10 years, there has been a swing toward the belief in Silicon Valley in particular that the founders tend to be very important. You want them, keep them involved. Lots of companies feel like there's so much adverse pressure in the public market that it makes sense to keep control with a small group and the founders. Now we're seeing the other side of that. But that said, the reason the company had a $47 billion valuation and was allowed to go as fast as it was because, in part, SoftBank kept continuing to provide capital. The founder can't force that, no matter how much control he had. So it was a combination of factors here that led to this disaster for employees and everybody else.
All right, we're going to leave it there. Thanks to you both. Henry Blodgett and Tamara Belafonte.
Alrighty, coming up on the tasting menu, the future of ride-sharing, eye-popping jobs growth, and a 5-hour work day. We'll be right back.
The Bond Report.
London. Switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
What can you get from Tesco for £1 each this Halloween?
A pumpkin.
More.
A spooky pumpkin cup.
More.
Ghostly balloons. Spine-tingling spider webs. Ghoulish plates and napkins.
More. Yes, it is scary what you can get for just £1 each this Halloween.
Tesco. Every little helps. Available in selected larger stores. When it comes to keeping your small business valuable information safe, Dell Small Business Technology Advisors can recommend tailored security solutions, like computers with Intel Core processors, servers, storage, networking, plus industry-leading monitors and software. Running your own small business is a big challenge, but with the right partner, it's a lot easier. To speak with an advisor today, call 0800 085 4878. That's 0800 085 4878.
Can I have chemo at home?
It's only suitable for a couple of types of
treatment.
What does your doctor decide?
When you search one question about cancer, you end up with millions of results which contradict each other. For clear and uncomplicated information, come to Cancer Research UK. Visit us online or give us a call on 0808 800 40 40. Cancer Research UK. Together, we will beat cancer.
This autumn, as the nights draw in, beat the cold with Now TV. Curl up with the latest blockbusters, including Bohemian Rhapsody and Hotel Mumbai. Plus, with over 40 new movies added each month, from Aquaman to How to Train Your Dragon 3, Now TV's got you covered, wherever you feel like watching. Get cozy with the latest and best movies for just $11.99 a month. Search Now TV today. 18 plus month passes auto renews unless cancelled. Terms apply.
Hey you. Yes, you. We didn't make Nature Valley nut butter biscuits so you could just sit and munch them on the train. Not when there's a whole forest out here to explore. Isn't that right? Go get it!
Delicious whole grain biscuits with a real nut butter filling. Nature Valley Nut Butter Biscuits. Get out more.
With the new Halifax Family Boost mortgage, children can get help to buy their first home, and mum and dad earn interest on their savings. Everyone's a winner. The new Halifax Family Boost mortgage. Halifax makes it happen.
Your home and savings could be at risk if mortgage repayments are not maintained. Only available in England and Wales. One applicant must hold a Halifax Reward or Ultimate Reward current account. Conditions and exclusions apply.
Welcome back to Power Lunch. We have a news alert on Ken Fisher, the investment manager. Let's go to Leslie Picker for the details. Hi, Leslie.
Hey, Tyler. These are according to some Reuters headlines just crossing. Fisher Investments CEO Damian Ornani saying Ken Fisher will not be speaking in the near term to large audiences. He said, however, that their process would be impaired to a certain extent. That's a direct quote. If Ken Fisher were to step down, Ornani is speaking with Los Angeles Fire and Police pension officials. And of course, this comes after more than $2 billion worth of assets have been pulled from Fisher Investments amid some of those comments that he made at a recent conference that were seen as lewd and offensive to some people who were there. We have reached out to Fisher Investments for comment and have not heard back, but we'll let you know when we do.
What do you think he means when he says our process would be impaired? I can see where their marketing would be impaired because he is a visible presence in their advertising.
So a lot of these investment firms have kind of key man clauses where you have someone like Ken Fisher who's been the face of it. He's kind of dictated how the investments would be allocated and kind of been the visionary behind the strategy. So oftentimes with these hedge funds or investment firms, you've got a key man in there where people are very concerned and think it would do more harm than good if you lost that key man in a situation like this. Now, we've seen, of course, in the past where that hasn't necessarily been the case. So it's interesting that they have come out and said that, especially as $2 billion in assets have been pulled, but they do still have about $100 billion in assets at the firm. So, it'll be interesting to watch this one as time goes on.
All right, Leslie Picker, thank you.
And here's a taste of some of the other stories we're watching today. Morgan Stanley is bullish on Uber and Lyft. The firm believes both companies are on the path to profitability and both can still grow ridership through 2023. It favors Uber over Lyft due to its global reach. It's been a rough year for these two since their IPOs. Uber is down around 26%, while Lyft, guys, is down around 40%.
I thought it was interesting that they highlighted that the single market that Lyft is in, the U.S., poses a greater risk. When so many bullish people on Lyft, bullish investors say that it's because of the U.S. focus that they prefer Lyft.
Yeah. All right, the return of Popeye's chicken sandwich is sending it on a hiring spree. Popeyes will hire 400 new employees in conjunction with the November re-release of the chicken sandwich. Last time, it's a job grower, folks. The last time the chicken sandwich was on the menu, Popeyes sold out in 2 weeks, and people waited in the drive-through line for hours. Shares of Popeye's parent company, Restaurant Brands, are up nearly 2% today. More people, more chicken, that's what we need.
Is it going to be enough?
Who knows?
It could be 2 people per store just for the sandwich.
But I kind of want to try it.
Yeah.
I do. I'm thinking about it.
It comes back.
Yes.
All right, working 9 to 5, try 8 to 1. A German tech consulting firm is encouraging employees to only work 5 hours a day. It did establish some ground rules banning cell phone and social media use, limiting meetings to 15 minutes, discouraging small talk. Despite the shorter workday, the company's CEO says his employees still produce the same level of output. This falls in line with studies that show people average 5 productive hours of work each day. I guess the 3 other hours are filled with nonsense.
It's true. There's a lot of downtime. We got to start this culture change. 5 hours max.
I just ordered some boots online, by the way. So there you
Why
go.
don't people work 8 hours productively then?
Melissa, no. It's not the direction we're trying to go in here. 5 productive hours, or you do 8
I
hours
think we ought to
4
have
days a week.
10. That's what I think. You should either have a 10-hour day, 4 days a week. Everybody gets Friday off.
Yeah.
That's what I'd go for.
I'm for that.
Well, there's less than 2 months to go until Christmas. We're going to get a check on retail at the head of one of the biggest shopping center operators in the country after this quick break. Stay with us.
Where you go, take a look.
What do you look for when you trade?
Fall in love with the brand new iPhone 11 at Tesco Mobile. Take amazing photos with Apple's best ever ultra-wide lens camera. You can get the iPhone 11 for just $37.75 a month with no additional upfront costs. What's not to love? Search Tesco Mobile or visit us in store. Tesco Mobile. Every little helps.
36-month credit agreement, rolling monthly usage contract. Subject to status, phase policy applies. See tescomobile.com/terms.
When it comes to keeping your small business valuable information safe, Dell Small Business Technology Advisors can recommend tailored security solutions, like computers with Intel Core processors, servers, storage, networking, plus industry-leading monitors and software. Running your own small business is a big challenge, but with the right partner, it's a lot easier. To speak with an advisor today, call 0800 085 4878. That's 0800 085 4878.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want horrors, no problem. It's not real, it's not real, it's not real. Thrillers, they're going to be on the edge of their seats with these. Or how about football? I've got the Premier League. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto-renew, terms apply.
Watford, there's nothing like coming back to a warm home after a long day at work, especially when you've been stuck at a cold train station in rush hour for what seems like an eternity. Luckily, with Hive Active Heating, rated 5-star on Trustpilot, you can turn your heating on from wherever you are. And now with our new Hive radiator valves, you can even control your heating room by room. Search Hive Heating to buy now. Hive services require broadband and Wi-Fi. Terms apply.
Stop right there, peoples of London. If your al dente means trip to al dentist, or smoke alarm go off when dinner's ready, then you commit crimes against cooking. So thank goodness for Meerkat Meals. Dine out with 2-for-1 on food at your local favorites, like Chicago Rib Shack Wandsworth and Beefeater. All with the Meerkat app when you buy, so compare the market. Uh-oh, dinner's ready. Sergey, get your coat.
Qualifying purchase 2-for-1 on equivalent starters, mains and desserts, a la carte only, Sunday to Thursday, T's and C's and exclusions apply.
Welcome back to Power Lunch. Let's get a retail reality check. Kimco Realty owns and operates more than 400 U.S. shopping centers. And despite warnings of a brick-and-mortar apocalypse, this retail-focused REIT is up more than 40% this year and trading near 52-week highs. Third quarter results met estimates this morning. The stock fractionally lower right now. Some of its top tenants include TJX, TJ Maxx owner, Home Depot, Whole Foods, and Walmart, to name a few. And here for a Power Lunch exclusive is Connor Flynn, president and CEO of Kimco Realty. Welcome to you. Busy dad too. You're doing a lot here. So we're so glad you could be here. But it's interesting at a time when people say the mall is dead, the strip mall is alive and kicking, right?
Yeah, we don't have any department store risk, so that's definitely a benefit right now. Typically, our shopping centers are anchored by a grocery store, so Whole Foods, Trader Joe's, Safeway, Albertsons, and those have been performing quite well.
What happens if the mall starts to copy your strategy, which some of ours even around here are doing, and they're saying, great idea, we'll do that. Does that take away your competitive advantage?
So that's what we call shadow supply in terms of identifying where there could be a competitor coming into the market. The nice part about how we've repositioned our portfolio is we feel like we actually now have the portfolio that we dream of being very opportunistic And then looking at the competitive set, we believe that our rents are below market, so we can continue to attract new tenants and be able to push market rents. We're at a 40-year low in terms of new supply, and the demand sources are very strong. Actually, our occupancy hit an all-time high today on our earnings call, and so 96.4%. And on the anchors, over 10,000 square feet, we're 98.7% occupied. So we really do have a nice spot in terms of the retail of what's working. I know Jim Cramer likes to reference Watch. Walmart, Amazon, Target, Costco, Home Depot, we're their largest landlord.
Yeah, but you can't put K into that acronym. It messes up the whole thing.
We're very lucky in terms of where we position the portfolio. The other piece of the puzzle that we're actually starting to unlock is mixed-use redevelopment. We've now entitled over 4,500 apartments on our sites, so we're unlocking the highest and best use of the real estate.
So apart from it just being your sheer brilliance, which is why you're doing so well, you've got really good tenants. Is that what distinguishes the winners from the also-rans in your business? In other words, you've got to have, and that's why you've got low vacancy rates and so forth. I mean, you got to have winning stores.
You have to have, it starts with location. You got to make sure you have the location that the retailer believes fits their model in terms of how you service the consumer today. So I like to say we're at the crossroads of value and convenience. And convenience today is so critical to the shopper. And so typically we're located either on the way to work or on your way home. And so as retailers evolve today, they're using their store base to really distribute goods in a number of different ways. And so you can click and collect, you can order online, pick up in store, you can have it delivered from the store, or you can go in and have an in-shopping experience. And that's what Target, I think, has done a really good job.
Target and Walmart as well.
Absolutely.
But they're giving Albertsons and Kroger's and Safeway a run for their money in terms of competing on those multi-platforms. And so I'm wondering, if you benefit from the strength of a Walmart and a Target, but doesn't that also endanger some of your other tenants who you rely on?
There's definitely a lot of competition today in retail. Amazon has been obviously known for a while in terms of the behemoth coming into retail. I think Costco, Walmart, Target are doing a very good job on executing, but the grocery store continues to evolve as well. They have a lot of prepared foods now, a store within a store that you're seeing them do. You usually walk in, you have a sushi restaurant or a pizza guy, or sometimes now there's a brew house in there. So it continues to do well. Albertsons just reported very, very strong numbers.
Brew house, now you're talking to me. Kelly, you were talking in the last hour about that American Dream place next to MetLife Stadium.
Yep.
I hear that they're going to charge $30 for parking there.
What?
What do you think of this place? It is an enclosed, quote, mall, but it's an amusement park.
It is heavily weighted towards entertainment. There's no doubt about it. I think they're going to be drawing from a wide trade area. I probably would tag them as more of a tourist destination versus a convenience-oriented destination. We'll have to see how it does. It's obviously been in the works for a very long time in a number of different iterations. So I'm hopeful for them because we need some retail wins today.
We certainly do, not just yours. Connor, again, thank you for joining us. It's great to have you here talking through some places where brick and mortar is thriving. We appreciate it very much. Connor Flynn of Kimco Realty.
And Check Please is next.
Fall in love with the brand new iPhone 11 at Tesco Mobile. Take amazing photos with Apple's best ever ultra-wide lens camera. You can get the iPhone 11 for just $37.75 a month with no additional upfront costs. What's not to love? Search Tesco Mobile or visit us in store. Tesco Mobile. Every little helps.
36-month credit agreement, rolling monthly usage contract. Subject to status, phase policy applies. See tescomobile.com/terms.
This autumn, as the nights draw in, beat the cold with Now TV. Curl up with the latest blockbusters, including Bohemian Rhapsody and Hotel Mumbai. Plus, with over 40 new movies added each month, from Aquaman to How to Train Your Dragon 3, Now TV's got you covered, wherever you feel like watching. Get cozy with the latest and best movies for just $11.99 a month. Search Now TV today. 18 plus month passes auto-renews unless cancelled. Terms apply.
Be honest, how much attention are you really paying to this advert? 25%? Maybe 30% if you're sitting in traffic and the kids have stopped arguing? What about 0%? Well, now's the time to give 0% attention. Because for a limited time only, the entire Mini range is available with 0% APR. All you need to decide is which Mini is perfect for you. Good to know we've now got 100% of your attention. Search 0% Mini to find out more. Who's in? Minimum 25% deposit on 24-month select agreements for new models ordered by 30th of September 2019 at participating retailers, subject to availability. UK residents aged 18+. Guarantees may be required. Mileage and other conditions apply if you return the vehicle. T's and C's apply. Mini UK, a trading name of BMW UK Limited, is a credit broker, not a lender.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram for the latest and greatest audio happenings across the app. Explore exclusive content.
It's called Indie.
Learn about the hottest new podcasts.
The Nostalgia Mixtape, a new podcast hosted by yours truly, Savannah Shroudy.
And get alerted when the big game's about to begin.
This Sunday is Championship Sunday, when we'll find out which two teams are going to play for the Lombardi Trophy.
Add TuneIn to your feed and be in the know when it matters most.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Start hearing more of what you want. Upgrade to TuneIn Premium and get over 45 commercial-free music stations, live commercial-free news, and every live NFL, MLB, NBA, and NHL game. Visit TuneIn.com/premium to upgrade.
Check, please.
In case you all have forgotten, today is the busiest day for earnings season when it comes to S&P 500 companies reporting. And after the bell, just to give you a sample, we've got Amazon, Intel, as well as Visa. So these are all ones to watch.
You wouldn't think it, but Visa in a way is a bellwether. This is one of the biggest momentum stocks out there.
Yeah.
If there's any kind of shift happening, it should happen, you'd think, at their expense and MasterCard's as well, and not just at the FANG names and some of the other players like Twitter that we've been talking about.
I want to correct myself. I just said it's going to cost $30 to park at that mall, the American Dream Mall. It will cost $30 on event days at MetLife to park there. Otherwise, it is up to 8 hours plus $24, up to 4 hours. It's about $4.
They're charging you to park there?
They charge you to park. They have 33,000 spaces, however.
They should just set the thing on fire.
Thank you for watching Power Lunch.
Closing bell right now. And they don't charge you to park.
Welcome to the closing bell, everyone. I'm Wilfred Frost. I'm here at the Twitter post. That stock plunging over 20% as earnings majorly disappoint. We are in an earnings-driven market. 59 minutes, not just left of trade, but also until more earnings hit the tape, including the big one, Amazon.
And I'm Morgan Brennan in for Sarah Eisen. Let's look at what's driving the action today. The vice president making some sharp criticisms of China, but saying the U.S. is ready for a new future. Corporate earnings taking a slightly more negative tone today, with the names from 3M to Twitter sharply lower. And new economic data shows business investment coming in soft, but the overall job market remains solid. So joining us for the hour is Stephanie Link from Nuveen, a TIAA company. Stephanie, what do you think the theme is here? I mean, we started the day up almost triple digits on the day. Then the lows, we were down triple digits. Now we're somewhere in the middle.
It's been crazy with earnings, too. I mean, non-stop. But the theme today is the shift right back to growth from value. And thanks to PayPal, thanks to Microsoft, thanks to ServiceNow. And value is underperforming because I think it's all about 3M and what they said, right? Weak China, continued weak in auto, electronics, no green shoots. And after yesterday, where Caterpillar gave us some hope and Boeing gave us some hope, today took it all back.
Some of the commentary from the industrials so far, and I'm thinking about United Technologies and Honeywell last week as well, some of the commentary has actually been a little bit better around China. So I wonder how much of this you think is 3M specific and where their end markets are focused versus the broader sector.
Yeah, I mean, especially in electronics. And I also do think, though, that they have high variable costs at 3M. And so they have some company-specific issues. They didn't take production down quick enough. So, yes, some of it is 3M, but we felt so much better yesterday.
Yeah.
Post-CAT, post-Boeing, those stocks ended both up yesterday. And so, of course, they're giving it back a little bit today.
Lots to discuss with Stephanie throughout the course of the next hour. Markets at the moment see the Dow lower, S&P just high, and NASDAQ leading the charge with 58 minutes left of trade. Let's focus in on the big stories we're watching. Bob Pisani's tracking all of the movers here at the Stock Exchange. Bertha Coombs doing the same at the NASDAQ. Julia Borson is digging deeper into Twitter's big slide, and Kayla Tausche is covering comments from Vice President Pence on China and on Nike. Bob, let's kick things off with you.
A little bit of a focus on China, autos and industrials. Just take a look at the movers today on the Dow, particularly 3M down. Their comments exposure to China, to autos, poor guidance there weighing on that. And that's a big drag on the Dow. McDonald's has been down every single day, last 3 days since their earnings. It's down about 6% for the week, 1.5% today. We had good couple of days in healthcare stocks, but they've all reversed today. So Pfizer and Merck is down. Not so with the banks. JP Morgan, another new high today. Bank of America, another new high. The banks have been terrific since earnings season began. And of course, we'll hear from the consumer right towards the close. Visa and Capital One tonight. Guys, back to you.
Although, Bob, those are the only two big banks that are up. The other four of the big six are slightly lower because yields have slipped a bit.
Yields have slipped, but the important thing is overall, you get typically these banks trading down. The KBE will typically trade down as you're moving into earnings season. It's actually been on the upside since then, so that's a little bit of a reversal.
Yeah, I see we're kicking off here the 2 hours with one of Wilf's very favorite topics.
Hold on, you just mentioned industrials to Steph as well, so,
we can talk financials.
Give as good as you
can. Do whatever you like.
Exactly.
Yeah, we're getting it now before we get all those big tech earnings after the bell. The NASDAQ, speaking of, outperforming throughout today's session. Let's get to Bertha Coombs for more. Bertha.
Thanks very much, Morgan. This morning it was a little bit led by Apple, but Apple has sort of slipped, but still it's the earnings movers today that are still going strong. Among the big gainers, uniform maker Cintas, which is kind of an economic bellwether, not only beat but raised its outlook, reaching an all-time high today. Same story for O'Reilly Automotive. While PayPal narrowed its guidance, analysts are encouraged by the top-line beat and the opportunity for Venmo. Meantime, chip equipment makers Lam Research and MKS Instruments leading the semiconductor sector, both hitting new highs as they reported better-than-expected results and lifted guidance, providing a halo effect for Applied Materials and Brooks Automation, which report next month. Meantime, take a look at Invisalign. The maker of Invisalign, Align Technologies, a big beat, saying it saw better than expected growth, particularly in a very key market for them, which is China, where they've made a big bet on the China teen market. When you take a look at that chart, guys, it's a little bit like a frown, literally turned upside down. Stock now up 19% for the year after having been hammered for much of the year. Back to you.
Okay, I'm appreciating the metaphor there, too. Bertha Coombs, thank you. Meanwhile, one tech stock that is sinking today is Twitter, following its quarterly results. And Julia Borston has all those details for us. Julia.
That's right. Twitter shares down 21% after the company reported revenue, earnings, and guidance that fell short of expectations, despite adding double the number of new daily active users as analysts had expected. Now, Twitter attributing this shortfall to a technical bug, which impacted its ability to target ads and measure their impact. RBC writing that, quote, Twitter having nowhere near the reach of Google or Facebook or the commercial intent of Pinterest or the unique demographic pull of Snap, it can ill afford any ad product mistakes. And we are seeing that today. Goldman Sachs downgrading the stock to neutral and cutting its price target on the stock. Guys, back over to you.
Julia, thanks so much for that. Steph, you have been a holder of this in the past?
I have.
And where do you stand now?
Well, I sold a little bit before the quarter just because I had good gains in it and actually bought Alphabet with the proceeds. I think down 21% is way overdone. I mean, user growth grew 17% and that accelerated sequentially. So to me, they have the users. I know we have to monetize it, and that's the big question, but they will. They will fix this eventually. So I'm not buying it today because it's down a lot. I want the dust to settle, but I actually think I'm going to buy it back at some point.
Was this a Twitter-specific own goal in strategy, or is it a sort of sign of things to come that Facebook hasn't encountered yet, or is just Twitter that messed up?
It's a Twitter thing. I think it's a bug, and they didn't get it fixed, and they didn't fix it fast enough. I don't even think it's even fixed right now, and we don't know when it's going to get fixed. That's the question, and I think that's why the stock is trading off so much. But I think it's an opportunity.
Switching focus to Nike and fresh comments from Vice President Pence about the company's business in China. Kayla Tashi has more in Washington for us. Hi, Kayla.
Hi, Wilfred. President Trump has often criticized the progressive social politics of Nike's athletes, but today it was the Vice President, Mike Pence, affirming the administration's avid support of demonstrators in Hong Kong, and in doing so, saying Nike and the NBA, which have been in hot water with Beijing after an owner's pro-Hong Kong tweet, have kowtowed to China.
Nike promotes itself as a so-called social justice champion. But when it comes to Hong Kong, it prefers checking its social conscience at the door. In siding with the Chinese Communist Party and silencing free speech, The NBA is acting like a wholly owned subsidiary of that authoritarian regime.
The speech overall was a broad criticism of China's record on human rights and unfair trade. Pence said the administration will keep fighting Beijing's aggression, which he says has gotten worse in the last year, but they do not support economic decoupling, and they still hope to sign that Phase 1 trade deal. Wilf?
Kayla, thank you very much for that. Now, on Tuesday, I did ask outgoing Nike CEO Mark Parker about China and the NBA. Here's what he said.
We're obviously staying very close to the situation, and like all of us, we hope there can be a peaceful resolution. You know, we're in the midst of some very complex times, and I think it's important that in this incredibly dynamic environment that we are very thoughtful and deliberate in every situation.
Mark Parker there earlier this week. I do think there's an interesting kind of difference here. They take a position on a social issue, famously a couple of social issues here domestically, but don't do so in China. And it does raise the question, why? Because Chinese sales maybe fall if they do, and U.S. sales were in fact supported by the stake they take.
Yeah, I mean, China's a huge market for them. They don't want to upset the apple cart, right, at this point. But I think it's something that absolutely has to be monitored, and I think Pence is right in terms of being, very critical of that.
The only thing I'd say as well, the Pence speech overall, clearly it was not outright supportive of China, but you flash back a year ago when he made it was not as harsh. It wasn't as severe as we got a year ago, which was still when we were kind of waking up to the scale of the trade war, and it was like, okay, they really mean business. This one almost, it was serious, but following all the tariffs we've seen, it was almost like a net improvement from where we've been of late.
Which is a good thing. Could you imagine if it was harsher? That would have been even worse. The market would tumble 200 points, I bet, 300 points.
Yeah, the comments about not looking to decouple and looking to see China on firm footing as well, despite the fact that this is a rising power competitor for us, strategic competitor for us on the military side, was pretty notable as well. Turning to the big picture, big winner, I should say today, is Tesla, soaring on strong earnings after the bell last night, including a surprise profit for the third quarter. For more, let's bring in Jed Dorsheimer from Canaccord Genuity and Joe Osha from JMP Securities. Good afternoon to you both. Joe, I'll start with you. The big move we're seeing higher in Tesla right now, warranted?
To some extent, look, they really surprised us on profitability. I've never seen a company with flat revenue come up with that kind of upside on profitability. So to some extent, it's merited. I will say that the reason we downgraded the stock, which is that the top line is decelerating, still is the reason we're not buying it today. So a legitimate surprise, but there are still some concerns out there about the rate at which they can grow this business.
Joe, is that bottom line improvement sustainable, or is it sort of a one-time leap?
Well, part of what's interesting about covering this company is the extraordinary margin volatility quarter to quarter. So you look at it and say, hey, that's great, but look, they're going to be bringing this China fab online. They've got to absorb that cost base. So I don't have a whole lot of conviction that this is the new normal. And honestly, when I was debating last night whether to upgrade the stock, that's one of the reasons I didn't. I'm not sure that this is sustainable.
Jed, do you agree with that? Do you see this as a shift in the narrative for Tesla? Is profitability something that is going to now potentially be more sustainable and here to stay?
Yeah, I think to a certain extent, maybe you don't see the same level of profitability, but the improvement is definitely here to stay. We tend to focus on the less sexy part of the business, which is how they're able to deliver a car that gets, 40-50% greater range than other EV companies. And that is resulting in a fundamentally lower cost structure, which I think is what we are seeing bear some fruit today.
Joe, self-driving, the automation piece of all of this and all the software that Tesla is pushing out to its vehicles on the road, is that a real threat to the other players in self-driving cars right now?
Honestly, it's such early days. If you were to ask me how I value the stock, there's not a lot that I'm assigning to, the self-driving or vehicle autonomy features. I think we're a long way away from that. I will say, I agree with Jed, right? They are still building the best electric vehicles out there. They're way ahead of everybody, and that should stand in their favor. But don't be buying this stock because of the vehicle autonomy.
Jed, does the competition ever catch up with them, or you think that they're always able to innovate and stay ahead? Or is there a definitive time period where they have to seize their advantage and grab market share?
I mean, to be seen, but that being said, having been an operator at a large Fortune 500, I think it's going to be challenging for 100-year-old business models to catch up an innovator like this. So I think they do have an advantage. They do have a technology advantage. You know, it's going to be seen whether or not they are able to capitalize on that to the fullest extent. That being said, they continue to de-risk this stock, and that is why the stock continues to move higher.
Jed, thanks for joining us today. Stephanie, stock's up almost 17%. You know, we're just talking about the big downside move in Twitter, but this big upside move in Tesla. How about this? Is this warranted?
Well, it's still down 10% for the year, though, so it's had a tough struggle as of late. But no, I think the free cash flow was very important, very impressive. They lowered their debt levels as well. That was also a good sign. So this is a cult stock. You either believe in it or you don't. At 110 times forward estimates, that's hard for me to pay. Even though it's down, it's still down 10%, you know, but too much for me.
We've got 46.5 minutes left of trade, and we're down on the Dow, higher on the S&P, nicely higher on the Nasdaq. Still ahead, it's the busiest day of earnings season with Amazon, Intel, Visa, Gilead, and many more gearing up to report results after the bell. We'll have some previews of what you can expect coming up.
And later, tech execs under fire as Mark Zuckerberg faces pressure from Washington and Jack Dorsey's Twitter takes a big hit. Recode executive editor Kara Swisher joins us to break it all down.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
What can you get from Tesco for £1 each this Halloween?
A pumpkin.
More.
A spooky pumpkin cup.
More.
Ghostly balloons. Spine-tingling spider webs. Ghoulish plates and napkins.
More. Yes, it is scary what you can get for just £1 each this Halloween.
Tesco. Every little helps. Available in selected larger stores.
This autumn, as the nights draw in, beat the cold with Now TV. Curl up with the latest blockbusters, including Bohemian Rhapsody and Hotel Mumbai. Plus, with over 40 new movies added each month, from Aquaman to How to Train Your Dragon 3, Now TV's got you covered, wherever you feel like watching. Get cozy with the latest and best movies for just $11.99 a month. Search Now TV today. 18 plus month passes. News unless cancelled. Terms apply.
John's just napping after a successful NEOP. But when he wakes up again, it won't be to an unexpected bill. Unlike some insurers, Vitality Health Insurance includes our full cover promise as standard. So we'll pay for all his inpatient and day patient consultant fees in full. Isn't that right, John? We'll come back later.
Time to review your health insurance. Just search Vitality Health. Vitality. Positively different. Your consultant must be recognized by us and the condition and treatment eligible under your plan. Minimum monthly premiums, terms and conditions apply.
Start hearing more of what you want. Upgrade to TuneIn Premium and get over 45 commercial-free music stations, live commercial-free news, and every live NFL, MLB, NBA, and NHL game. Visit TuneIn.com/premium to upgrade. Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn on the App Store today.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Adam Grant, and this is Work Life, my podcast with Ted. I study how to make work not suck.
And it's defined like this.
Blackout is a suspense-filled thriller from Endeavor Audio and Q-Code.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
We have got just under 43 minutes left of trade. Let's get over to Mike for today's market dashboard. Hi, Mike.
Hello, Wilf. Let's do a scan of the dashboard here. Cheap
and Deere. We obviously have been talking about this recent revival of inexpensive value stocks, whether that will continue. Maybe we can see in this chart. Rust and shine, industrial metals against gold is also an interesting cyclical indicator we're going to take a glimpse at. And then fear and greed, do a check of investor sentiment right now, and it had been pretty despondent a couple of months ago. Where does that stand? And then ebb and flow, a little bit about portfolio positioning and where cash is moving. So first of all, take a look at the S&P 500 value ETF against the actual S&P 500, the overall index. What you see right here is they are exactly just about tied, right? It's about less than 0.1% in terms of year-to-date performance. But look at it back here. I mean, you actually had some relatively wide spreads of 2.5 percentage points underperformance by value at various times this year. It has caught up, and it's interesting. It's showing you that there's a little bit more comfort about the cyclical story, a little bit less confidence in some of those big secular growth stocks. Also, though, what's the biggest holding in the S&P 500 value? It's Apple. Almost 9% of this is Apple, and another 3.5% is JP Morgan. So you got 1/8 of this value ETF is those two stocks that have recently been hitting all-time highs. So the question partly is whether those two stocks can keep clicking higher, guys.
It's so interesting, Mike, because one of those does have quite a lot of top-line growth still. The other has done recently, but it doesn't represent a sector that otherwise is considered having top-line growth.
Well, exactly right. And also, JP Morgan is also not, by a long shot, the cheapest of the large bank stocks, right? So it's some of it is portfolio construction and how we define these categories.
But on a PE basis, it's still very cheap relative to the S&P 500
relative to the market, sure.
Mike, thank you. Steph, where do you stand on this? And does that worry you if it means we haven't got a clear market leadership from more growthy stocks at the moment?
Well, I have a value bias, so I hope that this continues. But you do have to believe that global growth has stabilized. And you have to believe that ISMs globally have stabilized. And there's some debate about that, actually. Our own PMI today actually was not so bad, but Japan and Europe, not so good. So I think the debate is still out there, but I still think that certainly an energy, pockets of industrials, materials have been left for dead. These are the groups that will go if we see stabilization around the world.
All right, we'll have to see.
By the way, Mike brought up JP Morgan there. I had to respond.
I know. After the break, here's another one. Morgan Stanley out with a new note on the battle between Uber and Lyft. We'll tell you which name they say is the better buy next.
And it's a big day for airline earnings with Southwest and American out already. We've got Alaska Air results coming up after the close, and we will speak exclusively with their CEO about the numbers as soon as they hit.
Fall in love with the brand new iPhone 11 at Tesco Mobile. Take amazing photos with Apple's best ever ultra-wide lens camera. You can get the iPhone 11 for just $37.75 a month with no additional upfront costs. What's not to love? Search Tesco Mobile or visit us in store. Tesco Mobile. Every little helps.
36-month credit agreement, rolling monthly usage contract. Subject to status, phase policy applies. See tescomobile.com/terms. Chase the sun with TUI to over 40 long-haul destinations. Explore the beautiful beaches of Jamaica, sip margaritas in Mexico, or see the many wonders of Asia. And until the 26th of October, enjoy £150 off per booking. When you fly with us, we'll take you there on one of our state-of-the-art Dreamliner planes. TUI, we cross the T's, dot the I's, and put you in the middle. T's and C's apply. Minimum spend £1,200 and available on selected holidays. See website for details at all protected.
The B&Q 3 for 2 offer is now on, including an unmissable 3 for 2 on all paint, such as Dulux, Valspar and Farrow & Ball. For this show-stopping deal, hurry to B&Q. You can do it when you're 3 for 2 it. Every third item a single transaction in the send-in price order free. Offer ends November 3rd. See DIY.com.
Don't skip the start of the NBA season because you're out of the habit. Set a reminder with TuneIn. Make sure notifications are allowed on your phone and search for your team in the TuneIn app. Then, just find the game you want to hear and tap Notify Me. We'll let you know when tip-off is about to happen.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram for the latest and greatest audio happenings across the app. Explore exclusive content.
It's called Indie.
Learn about the hottest new podcasts.
The Nostalgia Mixtape, a new podcast hosted by yours truly, Savannah Shroudy.
And get alerted when the big game's about to begin.
This Sunday is Championship Sunday, when we'll find out which two teams are going to play for the Lombardi Trophy.
Add TuneIn to your feed and be in the know when it matters most.
Deep left center field. A grand slam!
October baseball is here, and TuneIn Premium is your ticket to the 2019 MLB postseason. Featuring the home and away feeds for every game, TuneIn Premium delivers every call of the ALCS, NLCS, and the 2019 World Series through the voices of the local radio broadcast teams.
In the air, left field and deep. He's at the wall.
Now until a new champion is crowned, hear every play of the 2019 MLB postseason live on TuneIn Premium. Upgrade today.
Welcome back to Closing Bell. Time to get word on the street. Bernstein initiating Peloton at Outperform with a $29 price target. The firm says the company is leading the disruptive wave towards connected fitness and has an addressable market of more than 15 million households in the U.S.
Deutsche Bank downgrading Ford from buy to hold, citing a drop in near-term earnings outlook. The firm says it worries about Ford's preparedness for an eventual U.S. industry downturn. It also says benefits from its $7 billion restructuring program could take longer to materialize than previously expected. Shares are down 6.5% today. And Morgan Stanley is out with a new note as well on ride-sharing, initiating Lyft at equal weight with a $50 price target. The firm forecasts Generation Z as driving Lyft's rider growth higher by 11% between now and 2023. However, Morgan Stanley says it prefers Uber over Lyft, citing improving U.S. rideshare profit trends at Uber. Nonetheless, Lyft shares are up about 1% today. Steph, here's what kind of tickles me about the Bernstein note on Peloton. Their price target is $29. That's the IPO price.
I know.
That's what we're talking about.
I know, but they weren't on the deal, so that's okay. I mean, I actually think it's a very thoughtful note. I like the sum of the parts analysis. 3 times for the equipment, 4.5 times for the subscription. The question I have is, can they get 40% subscription as a total percentage of revenue over the next 3 to 5 years? That's a big ask, I think. Now, if they do, that's going to explode margins, and their costs are going to be coming down at the same time. So you will see positive operating leverage. But that's the big question. Can they get that percentage? Can they get to 40%?
We've had all these buy notes this week, and the ones on Monday, of course, were those that were on the IPO. So I, like you, take much bigger issue when they're buys at the IPO price. From here, it's a bit cheeky. But across all of these notes, the two issues I worry about. One is they're all very bullish of what the addressable market is for such an expensive product, and it's quite hard to break that down. The proof will come in years to come. The other one is none of them really address this outstanding legal issue with the music publishers. We don't know how big that's going to be, but it is an overhang for the stock, and none of them really kind of address that. So that to me says they don't think it's a big issue, but maybe they're confident of that, but they just don't address it at all.
And that's the overhang, and that's also why the sum of the parts multiples that she is using is probably a lot less than what they should, because you have that as a potential problem down the road.
Peloton up 1% on that buy note today, still well below the IPO price, though, of course, of $29. Coming up, we've got your last chance trade. Steph is picking one of the worst performers in the S&P 500 today. Why she says it's a buy. That's coming up.
Plus, we're 1/3 of the way through earnings season with some massive moves as companies report results. We'll discuss what we've learned so far and what the rest of earnings season has in store. And as we head to break, here's a check on bonds. U.S. Treasuries ticking a bit higher with a 10-year yield above 1.76%. Stay with us. Closing Bell. We'll be right back.
The Bond Report.
Fall in love with the brand new iPhone 11 at Tesco Mobile. Take amazing photos with Apple's best ever ultra-wide lens camera. You can get the iPhone 11 for just $37.75 a month with no additional upfront costs. What's not to love? Search Tesco Mobile or visit us in store. Tesco Mobile. Every little helps.
36-month credit agreement, rolling monthly usage contract. Subject to status, phase policy applies. See tescomobile.com/terms.
No one wants to get caught in the cold in London. We're with you. So our boilers come with 2 years interest-free credit to avoid a big chill to your wallet. You'll get a 5-year British Gas warranty. And now we can even quote by video call after work or weekends at a time that suits you. Get a quote by the 30th of November and get £150 off a new boiler or £450 off for existing home. Search British Gas New Boiler. Conditions apply.
The B&Q 3 for 2 offer is now on, including an unmissable 3 for 2 on tiles and flooring, like real wood and laminate. So hurry to B&Q. You can do it when you're 3 for 2 it. Excludes cut-to-measure flooring, flooring accessories and underlay. Every third item per single transaction in descending price order free. Offer ends November 3rd. CDOI.com.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram for the latest and greatest audio happenings across the app. Explore exclusive content.
It's called Indie.
Learn about the hottest new podcasts.
The Nostalgia Mixtape, a new podcast hosted by yours truly, Savannah Shroudy.
And get alerted when the big game's about to begin.
This Sunday is Championship Sunday, when we'll find out which 2 teams are going to play for the Lombardi Trophy.
Add TuneIn to your feed and be in the know when it matters most.
Ah, finally another commercial, said no one ever. Visit tunein.com/premium to upgrade now and get over 45 commercial-free music stations.
At home or on the go, stay up to date on the latest news and political trends with Fox's full lineup of shows. Plus, when news breaks, Fox has you covered with live updates and expert analysis on the biggest developing stories. Listen to Fox News Talk anytime on TuneIn.
In the Democratic debates, moderators always ask, will you raise taxes to pay for this program? Wrong question.
The key assumption here is that taxes are always poison, and that's an assumption we've been operating under for decades. But there is evidence that the assumption is not true.
Plus, the math is wrong. Don't miss this week's On the Media from WNYC. Listen to the On the Media podcast from WNYC Studios on TuneIn today.
Welcome back. We've got a market flash on Johnson & Johnson. Eric Chemmy's got it for us. Hi, Eric.
That's right, Wilfred. So CVS Stores confirming it is removing all 22-ounce bottles of Johnson & Johnson baby powder from its stores and its website store. This coming after J&J initiated a recall of its baby powder products last week out of abundance of caution following concerning FDA tests. J&J shares dropped as much as 3% on the news, but have since recovered a little bit, down now about 1.5%. Wilf, back to you.
Eric, thank you. Steph, what's your take on this? I mean,
I like it. I like the stock. I mean, it's very cheap. They had a very good earnings report. No one cares about that right now. They care about the asbestos, and I understand that, and I'm sensitive to that. It's a $300 million product, so let's put it into perspective. It's small, and so we'll see how it goes. But I'm on weakness. I've been actually nibbling.
There we go. Down 1.5% opportunity. If you agree with Steph. We've got 31 minutes left of trade. Here are the key things driving the action. The vice president making some sharp criticisms of China, but says the U.S. is ready for a new future. Corporate earnings taking a slightly more negative tone today, with names from 3M to Twitter sharply lower. And new economic data shows business investment coming in soft, but the overall job market remains solid. We are down on the Dow, higher on the S&P with 30 minutes left.
It's time now for a CNBC News Update with Sue Herrera. Sue.
Hello, Morgan. Hello, everyone. Here's what's happening at this hour. The CDC releasing updated statistics on vaping-related illnesses. It says that there now have been 125 new cases of lung-related injuries and 1 new death in just the last week. That brings the total to more than 1,600 cases and 34 deaths nationwide. Hundreds of residents of Sonoma County in Northern California have been evacuated as the Kincaid fire consumes 10,000 acres. PSE&G began shutting off power to 178,000 customers in 17 California counties. In Southern California, blackouts hit more than 15,000 Southern California Edison customers. An industry insurance group says that the tornadoes that struck the Dallas area during a Sunday night outbreak caused an estimated $2 billion in insured losses, making it the costliest in state history. And unfortunately, another round of storms is expected today. And Jimmy Carter is out of the hospital where he was treated after fracturing his pelvis in a recent fall at his home. A Carter Center spokesman said in a statement that the former president was looking forward to continuing his recuperation at home, and he thanks everyone for their kind well wishes. Speedy recovery to him. That's the news update this hour. Morgan, I'll send it back downtown to you.
Exactly. We are wishing the president a speedy recovery. Sue Herrera, thank you. Let's send it over to Mike Santoli for his second dashboard. Mike.
Morgan, this is rust and shine, or rust versus shine. We've been taking a look at a lot of indicators that show the market is suggesting that's better growth globally is ahead. Emerging market stocks outperforming, value stocks outperforming. This is the ratio of the CRB Industrial Metals Equity Index against gold. So when does gold do well against industrial commodities? Well, when you have macro stress, when you have deeply negative bond yields. This is pretty significant, right? You had this pretty good downtrend going in this relationship, a nice bottom, and then you kind of broke the downtrend. So a lot of folks who look at the message of the markets are saying, okay, at least tentatively, we're suggesting that growth is getting some traction out here, and things like industrial commodities, which nobody buys unless they need them or they think somebody else is going to need them more later, is starting to act well. So this is one of those relationships you have to watch, because obviously a lot of ground to make up if, in fact, this is going to be a dominant trend.
Yeah, Mike, thanks. Steph, I mean, this goes back to in some ways, it goes back to the conversation we were just having.
That we always talk about. You and I always talk about industrials and metals and mining and all that stuff.
But I'm wondering what you think of that chart in light of that.
I'm encouraged because I own some of those stocks in there. But no, it's all part of the value trade. So again, if you do believe that we're getting close to the ISMs sort of bottoming, sort of stabilizing, you're going to want to own these. Some people will wait for confirmation and the chart to look much prettier than but I'm a value buyer. So I want to buy when it's down and when they're down and out. They certainly are down and out.
Gold's still up 17% year to date, though, as well, worth noting. Meantime, more than 1/3 of S&P 500 companies have reported results, with 80% of the earnings coming in above estimates and only 13% below, according to new data from Refinitiv. For more, let's bring in Paul Hickey, co-founder of Bespoke Investment Group, and Phil Camparelli, asset allocation strategist at JP Morgan Asset Management. Very good afternoon to you both. Paul, kicking off with you, does that data support what you've seen as well? Is it that positive, 80% beats?
Yeah, I mean, I think it is positive, and it stems from the fact that coming into earnings season, expectations were so low coming in. I mean, we saw one of the worst negative revisions ratios of the last 10 years coming into this quarter. So when you have such low expectations, it's easier for companies to beat them, and hence you're seeing positive stock price reactions to earnings. The market's up over 2% in the last 2 weeks, which is nothing to sneeze at. And the average stock that's reported is up over 0.4%. So it's been quite a healthy report, despite some of these bombs from specific companies coming out.
Phil, do you agree with that? And I guess perhaps even more importantly, looking at some of the guidance we're getting, and then of course earnings expectations going into 2020, what's the picture telling us there? Do things need to come down further?
Yeah, so the price action of earnings season this quarter is really supportive of a market that still is in technically good shape. So what do I mean by that? Companies that beat, if they beat by 1 standard deviation, I think they're moving on average by over 2% excess to the S&P. Companies that miss, they're losing about 1% to the S&P. That is so important because those beats, that's the strongest amount of excess performance since 2009. The misses, lowest amount of giveaway since 2010, which tells us market is still short, and that's offsetting some of the negative fundamentals that we're getting out of things like durable goods or the last retail sales number.
Paul, you mentioned there were some bombs. There have also been some big jumps as well. We've got one today in Tesla. Are there others like that, and what stands out for some of those?
Yeah, so what's really interesting is besides the banks, which have been really strong, you've seen Tesla react very positively to earnings. You've had Winnebago report very positively to earnings, Polaris report positively to earnings, Harley-Davidson report positively earnings. Some of the top performances of any stocks reporting so far.
And
what are those companies? They're consumers. They make vehicles everybody wants, but nobody
Steph,
needs.
you're stealing Paul's big point.
It's about as discretionary as it gets.
Right, and so it just tells us that where the market was expecting things, there was either overestimating the economic weakness or underestimating the strength of the consumer coming into earnings season, and hence you see those big reactions. And I think that bodes well for some of the higher end consumer names forward this earnings season.
Okay, we're talking about earnings right now. Next week, I think all eyes sort of... Exactly. What do you think happens? I mean, it seems like there's almost a foregone conclusion in the market that we're going to get a cut, but is it really
Yeah, so it's about 90% priced in, and it's just amazing where we were this time last year, where Jerome Powell was saying we're far away from our neutral rate. He was right. He blew right past it, right? So he's got to take a couple back. That is the fundamental difference between what made so many people nervous this time last year and this year. They were hiking into December. 10-year rates were closer to 3%. They're at 1.75 now. You want to know why the consumer's strong? Because they have debt that's extremely affordable, right? Yeah. So that's probably the biggest antidote to all the fear-mongering that we've heard throughout the last couple of months.
Steph, this isn't as important a meeting as the last couple, though, is it? Market wants a cut, but would it fall out of bed completely if it didn't get it?
I think it might. Yeah. I think it might, because I think
versus
the percentage is expecting like the bulk of it, right? Is it like 90% now?
90% for next week. The Fed always goes.
Number, right? That's
when you have expectations this high, they,
even with China trade being on a better footing, even with earnings being on a better footing.
But we don't have a China trade deal. We just have a detente.
A tenuous truce,
right?
As I like
right.
To say.
So.
You know what's really important, though, about that is that even though they're priced in to go 90% next week, if they do go next week, those probabilities for December drop down to about 30. And I love the maturity of the market here, that they're not pushing the Fed into just taking this thing back to zero. They've gotten 3 cuts, and that's about what the market is expecting right now. And I love the way the market is trading with that.
Paul, bang. We get Amazon after the bell. We've gotten a couple names already, but you get Alphabet next week as well, Facebook. How important are these big cap tech names to the market story more broadly and us continuing to go higher from here?
Well, they haven't done much lately, and the market's been holding up well.
Yeah.
But we have the market here in the U.S. and global markets just simmering right below 52-week highs here. And if you just get a strong report from Amazon after the close or Google coming up next week, those could be the moves coupled with the strong banks that could really push things, get us out of this range that we've been so sick of hearing for the past 18 months.
How about value versus growth? Do you buy into it?
Not much. I think, we're still in a period of weaker economic growth. And when you see that weaker economic growth, people are going to, go to the higher growth companies, and interest rates are low. So that helps out the growth companies in that respect as well.
All right, Paul and Phil, thanks for joining us today.
Thanks.
Up next, we've got your last chance trade. Plus, 100% of analysts on Wall Street have a buy rating on Amazon. It will report earnings after the bell, along with Intel, Visa, Gilead, and Alaska Air. Closing bell. We'll be right back.
CNBC Sector Sword is sponsored by Sector Spider ETFs. Sector Spider ETFs. Visit us on the web at sectorspiders.com.
Flight number 417 is...
Fall in love with the brand new iPhone 11 at Tesco Mobile. Take amazing photos with Apple's best ever ultra-wide lens camera. You can get the iPhone 11 for just $37.75 a month with no additional upfront costs. What's not to love? Search Tesco Mobile or visit us in store. Tesco Mobile. Every little helps.
36-month credit agreement, rolling monthly usage contract. Subject to status, phase policy applies. See tescomobile.com/terms.
The B&Q 3 for 2 offer is now on, including an unmissable 3 for 2 on tiles and flooring, like real wood and laminate. So hurry to B&Q. You can do it when you're 3 for 2 it. Excludes cut-to-measure flooring, flooring accessories, and underlay. Every third item per single transaction in descending price order free. Offer ends November 3rd. See DIY.com.
Ah, finally another commercial, said no one ever. Visit tunein.com/premium to upgrade now and get over 45 commercial-free music stations.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn on the App Store today.
Major League Baseball postseason is in full swing, and TuneIn Premium puts you at field level for every...
And it's a home run!
Single...
And gone!
Game.
And that gone, a home run!
With TuneIn Premium, catch every pitch of every inning of every Major League postseason game until the final out of the World Series.
0-2 pitch, little half swing, and it hit...
At home or on the road, Major League Baseball's postseason action is on TuneIn Premium.
And that ball is gone!
Upgrade today.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Rachel Martin with David Green, and this is Up First from NPR News.
And it's defined like this.
Ladies and gentlemen, welcome to the show.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
All the way to the checkerboard. Touchdowns.
Despite the loss last week, the Badgers still control their Big Ten destiny. Wisconsin will face a formidable opponent as they try to get back on track with the undefeated and third-ranked Ohio State Buckeyes this week. The action starts at 9 a.m. Eastern this Saturday. Just search college to listen today.
Welcome back to the closing bell. We've got just 18 minutes left of trade. There's the sector heat map for you. Technology really leads the charge. Microsoft performing very strongly, of course, up 1.5%. Amazon earnings to come after the close today. Communication services at the bottom. Healthcare also struggling, down 0.6%. Down S&P either side of the flat line. NASDAQ leads the charge, up 0.75%.
Well, 18 minutes left to go. Stephanie, what's your last chance trade?
A little controversial. It's Baxter. It's down 10% today, and quite frankly, I'm surprised it's down so much on an internal investigation related to their currency hedges and accounting. Not a good headline, I get it, but I do think down 10% is overdone. Meanwhile, this is the best management team in the industry, blue chip balance sheet, great market share. They're outgrowing the market. They just put up 5% organic growth today in their quarter. Market's only growing 3 to 4%. Operating margins and gross margins are also in expansion mode. So it's trading now at 14 times EV to EBITDA. That's the way I think you should value it. The group is trading at 18 times. For a best-in-class operator, I think you're really, truly getting a quality name on sale.
Value play. Coming back to our theme.
A value play, yes.
Baxter, an opportunity there, trading lower today by 9.5%. Up next, we're going inside the market zone, where we'll bring you uninterrupted coverage of the final minutes of trade and preview what to expect from Amazon's results after the close. Don't go anywhere. Closing bell and the market zone back in a couple of minutes.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Should we go halves?
I'll get this. Let me just get my card, which was in my pocket.
You can't control awkward first dates. But if you temporarily misplace your debit card, you can freeze and unfreeze it on our mobile banking app. Feel in control every day. Lloyds Bank, by your side. You can only freeze some transaction types. T's and C's apply.
Far wing, elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut
the
it.
sideline, the Van Fleet for 3.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the
Search
right.
NBA today to start listening.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Rachel Martin with David Green, and this is Up First from NPR News.
And it's defined like this.
Ladies and gentlemen, welcome to the show.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
MSNBC is live on TuneIn. Get up-to-the-minute coverage on news and events from around the world with MSNBC's 24/7 station on TuneIn. At home or on the go, stay on top of the latest news and political commentary with MSNBC's full lineup of shows, including The Beat with Ari Melber, All In with Chris Hayes, and The Rachel Maddow Show. And when news breaks, MSNBC takes you there with live updates and expert analysis as the story unfolds. Search MSNBC on TuneIn to get in the know.
Deep left center field. A grand slam!
A October baseball is here, and TuneIn Premium is your ticket to the 2019 MLB postseason. Featuring the home and away feeds for every game, TuneIn Premium delivers every call of the ALCS, NLCS, and the 2019 World Series through the voices of the local radio broadcast teams.
In the air, left field and deep. He's at the wall.
Now until a new champion is crowned, hear every play of the 2019 MLB postseason live on TuneIn Premium. Upgrade today.
Stuck in traffic during the big game? With TuneIn Premium, you can listen to your favorite NFL team on the go. No TV required. Even during rush hour, you won't miss a single touchdown. Listen to the NFL on TuneIn Premium today.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram for the latest and greatest audio happenings across the app. Explore exclusive content.
It's called Indie.
Learn about the hottest new podcasts.
The Nostalgia Mixtape, a new podcast hosted by yours truly, Savannah Shroudy.
And get alerted when the big game's about to begin.
This Sunday is Championship Sunday, when we'll find out which two teams are going to play for the Lombardi Trophy.
Add TuneIn to your feed and be in the know when it matters most.
With 13 minutes left in the trading day, the Dow is down 20 points, the S&P is higher. We are now in the closing bell market zone. Commercial-free coverage of all the action going into the close.
CNBC senior markets commentator Mike Santoli is here with us to break down the crucial moments of the trading day. And today we've got Stephanie Link from Nuveen here as well. But let's kick things off on Tesla. That stock soaring after posting a surprise profit. Phil LeBeau has more. Hi, Phil.
Hey, Wilf, this stock trickling $300 a share for the first time since March, briefly above that after hours yesterday. Three things that really stand out about this earnings surprise. First of all, how did they do it? Well, they did it with lower operational expenses, higher automotive margins. They also reported positive free cash flow, and for good measure, the China plant, which they are in the midst of opening, it's ahead of schedule. We look for production likely before the end of the year, and when you look at the Model Y, that's the next vehicle, they're saying that they're going to move it up. Instead of rolling it out at the end of next year, they're going to roll it out next summer.
Phil, while we have you, transports are lower right now, but two names are trading higher. That's American Airlines and Southwest. Both reported earnings this morning. How did they do?
Well, they both beat the street, but that really wasn't the news of the day when you look at both American and Southwest. It was the commentary from their CEOs, both on CNBC with Gary Kelly and also during their earnings calls. American Airlines CEO Doug Parker, during his call, he said, look, we're looking for compensation from Boeing shareholders for the grounding of the 737 MAX. Gary Kelly this morning on Squawk in the Street says they're looking at possibly diversifying the fleet. And that's a big deal. They have flown only 737s since the airline started back in 1967. Don't forget, tomorrow night on Jim Cramer's show, Mad Money, you do not want to miss this. This is a CNBC exclusive. Doug Parker, he's going to be talking about not only their earnings, but you can bet he'll have plenty to say about the 737 MAX. That is tomorrow night on Mad Money.
Phil, on the Southwest comments, totally get your point. It would be a massive deal if they did it, but the market doesn't seem to suggest they're believing that as a possibility today, because Boeing stock's up a significant amount today, about 1% or so.
Well, I don't know if I would buy into that, Will, from this standpoint. Even if they were to at some point say, let's say a year or a year and a half from now, say, you know what, we're going to diversify. We're going to order some A220s or some A320s. It doesn't mean that they would cancel any of their Boeing orders. So you're not looking at a drop in the backlog of Boeing 737 MAXes. They're still at 4,400. That would be unaffected by Southwest potentially diversifying and going out and buying Airbus planes.
Phil LeBeau, thank you. Mike Santoli, I mean, it's been a little bit of a mixed bag in terms of the airline earnings we've gotten so far, at least the stock reaction, I should say. This is the consumer-facing part of transports, right? Emerging theme here, what does it tell us?
I think if you were looking for reasons to get concerned about the consumer or about the macro picture, you're not getting it from the airline results. So it's not about demand, being concerned about that. I think the market has been a little bit reluctant to pay up for what are known to be deep cyclicals. And even though they look cheap and all the rest of it, I do think that's where the caution comes in. It's not so much to saying that right now, this quarter or next, the consumer is weakening very much.
And Steph, Boeing just down so much Friday and Monday that kind of doesn't really matter what else the last couple of days. It's had a bit of a lift. Like, its results weren't good, but still.
It's lost $40 billion in value, right, since this crisis came about. So, I mean, there's a lot of bad news in the stock, and I think the fact that if they get this, they just need to get this plane in the air, and that's it. And then I think the stock will react much better. The valuation will actually creep higher. You'll get more people with confidence, and you'll see a re-rating. But it's going to take time. I've said that for a long time. I think in a year from now, though, the stock is a higher price.
So to come on the show, by the way, we will speak with the CEO of Alaska Air about the company's earnings results, which are due to hit any minute now after the close. He'll weigh in on the numbers, as well as those broader topics for the industry that we were just discussing. We've got just under 10 minutes, just about 9 minutes left of trade. We're almost flat again on the Dow, with the S&P and NASDAQ both improving as we approach the close. Shares of Twitter tanked today. The social media giant missed on earnings and revenue this morning and gave light guidance, citing product issues and advertising headwinds. Goldman Sachs downgrading the stock to neutral and slashing its price target by more than 30% to $34 per share. Mike, a big own goal here for Twitter this quarter, having started to show some signs of recovery over the course of the year.
It does appear that way. And the stock reaction also shows there's not a very deep reservoir of trust that the company has its arms around exactly how to optimize the user base for business purposes. I also think it inevitably kind of convinces people even more that Facebook is so effortless in how they do this. I mean, you know, Mark Zuckerberg was in Congress essentially because their platform targets people too well, and because it's just so magical in terms of kind of leveraging the ad potential, and that's the contrast that's always hung over Twitter.
Yeah, and it's interesting because you look at shares of Snap, Stephanie, I mean, those are actually higher today, and it almost seems like it's being taken, at least initially by the street, as an either-or scenario.
And I don't think it necessarily should be. I mean, look, I think Twitter, as I said earlier, I think it's way overdone in terms of the reaction, but it's going to take a couple of days to settle itself out. But remember, you get easy comparisons. You have the Olympics and the elections next year. So if anything, the 2020 setup is great now that the stock has derated and pulled back, and you're going to get all the weak hands out of the name. So that's why I said before, I'm going to look to maybe buy it back, but I want to wait for the dust to settle. This is a big, big move in a short day.
Let's go over to Seema Modi for a check on industrials, where we've also been seeing some big moves today. Seema.
Yeah, absolutely, Morgan. Watching the industrials closely after 3M's earnings disappointed. The maker of Post-it notes and adhesives used in cars cut its profit outlook due in part to the ongoing weakness it is seeing in China, where organic growth was down 9%. Analysts say gaining market share in the country is becoming a bigger struggle for 3M as China's economy slows down. And at the same time, competition from Chinese players is making it harder for the industrial giant to win new business. And guys, this is a problem for the broader sector. The big question is, what's motivating the Chinese to select domestic suppliers? Is it simply a pricing story, or, and perhaps more controversial, is it a rise in nationalism that is incentivizing them, Wilfred, to go with these local players?
Seema, thank you very much. Mike, we mentioned Boeing holding up well this week. CAT as well. I mean, 3M clearly not doing so, but 2 out of 3 ain't bad.
It really is about exactly what end markets you're exposed to. I look at the equal weighted version of the industrials ETF. It's at an all-time high. It's up today. So it's essentially not telling you that the entire sector is in a macro crisis.
Yeah, it's interesting, too, how much the auto piece of this seems to be playing out, especially where China exposure is concerned. So whether it's 3M, Stephanie, or like even names like Texas Instruments, for example, with some of the guidance and numbers we got there, too.
Yeah, I mean, 3M did say the consumer was very strong, healthcare and construction. So we know those end markets are actually pretty healthy. Maybe construction's a little bit iffy, I think. But they said good things about those end markets, and clearly electronics and auto just really bad. That's also why, by the way, DuPont is down so much, because they have a big exposure as well.
We've got just over 5 minutes left of trade. The S&P 500 is up 0.2%. The Dow is down 11 points, but it is improving as we approach the close. Perhaps it can improve enough to go positive. The Nasdaq leads a charge of 0.8%. Today is the busiest day of earnings season. After the bell, we'll get results from Amazon, Intel, Visa, Gilead, and Alaska Air. Josh Lipton has a preview of the big one for us. Amazon. Hey, Josh.
So, well, here is what the street expects from Amazon. Q3 EPS of $4.62 on revenue of $68.8 billion. That would be a jump of 22% on the top line. Yes, checks indicate healthy U.S. e-commerce spending trends throughout the quarter, but analysts highlight a couple of issues of potential concern, too, that Amazon continues to invest a lot of money to reach one-day shipping goals. How much does that weigh on profit margins? 2, the growth rate for AWS. Analysts expect revenue there of $9.1 billion. That would be a jump of 37%, the same growth rate as last quarter. Guys, back to you.
Josh Lipton, thank you. Mike Santoli. Where to start first with Amazon?
Well, I think the place to start is that the stock has been very much sideways, very far below its high. So that would argue for perhaps the potential for people looking a little bit on the bright side, depending on what we get later. I think that's been pretty conspicuous that among the big tech stocks, Amazon has really been stuck in place for a little while.
Stephanie, I mean, we've seen this company put so much money towards transportation and logistics and this whole push for one-day shipping in the last 2 quarters. If those numbers come in higher than expected, do you think the street forgives that coming into the Christmas shopping season?
I mean, I think so. The stock has really lagged on the fangs, really. And I think that it's really more about AWS and what they're going to put up relative to what Microsoft Azure put up yesterday. So that's the number that I'm actually watching. But in terms of margins, because they're spending so much money on travel and all that kind of thing, I'm expecting kind of lower margins.
What are you looking for Intel?
Data center recovery. I hope we see it. I think expectations are low enough. We know PCs are strong, and that's been the outlier. So it's really whether or not they can see growth in data center after really it collapsing over the last 2 quarters.
All right, well, Mike has more on the market internals today. Mike?
Yeah, the market itself, if you look at the broad benchmark, it's been fighting it out around the flat line all day. But look at the distribution of volume, up and down volume on the New York Stock Exchange. It's actually been decidedly negative. So there's a little bit of a give back day in terms of overall volume split. But check out the new highs and new lows on the New York Stock Exchange. This has been one of the stronger points of this market. Breadth in general has been good. New highs versus new lows. I mean, there you go. It's better than 4-to-1 to the positive right there. Also, did want to check in on the software versus banks. This is a concentrated version of growth versus value, and you had a little bit of a slippage in this trend recently. So you had banks outperforming for a while right now. Today, you have just about a 4 percentage point compression of what's been that spread for a while. Still, though, banks had the lead. We'll see if this lasts beyond one day for software.
Today itself, though, Mike, it's really the tech sector that's leading the charge.
Absolutely. Tech is the thing that's distinguishing everything else. The rest of it is kind of flat to down.
Semi story? Do you think it's the recovery, I guess I should say? Is it intact?
I think so. Lam Research was very encouraging, and they basically pulled forward the recovery by a quarter. So I actually think that these stocks are still very attractive. I like NXPI. I was buying that yesterday after Texan disappointed. I like ADI as well. I own Broadcom. I own a lot of them, so I hope it works, but I think the valuation case is very compelling.
We've got 2 minutes left of trade. The S&P 500 is up by 0.2%. The NASDAQ is sitting near session highs and leads the major indices. Let's get over to Bertha for a breakdown of the movers. Hi, Bertha.
Thanks very much, Wolf. Yes, the NASDAQ 100, in fact, is now within 1% of its July high. And one of the stocks that has kept it sort of hemmed in away from that new high has been Microsoft. It's been kind of stuck a bit, particularly in this quarter. Earnings better than expected and fears about slowing growth in terms of cloud. And Azure kind of diluted a bit, although they did see a bit of slippage from last quarter. Same story in the chip sector, where Lam Research is really lifting the entire sector and hitting some of those macro notes and knocking down some of those fears. Lam Research talking about the fact that China, actually, they saw higher than their historic average activity there, particularly coming from local Chinese companies. eBay, meantime, was the ugly performer in the tech space in terms of earnings. Although it was in line, its guidance was disappointing, and you can see they're down 9%. Over to Bob Pisani.
Thank you, Bertha. I want to hear from Visa after the close. Consumer, folks, darling of the fintech space, major player of the U.S. consumer, the engine of global growth, the U.S. consumer. Credit cards have been a big bright spot for the banks. Good growth, very little deterioration in quality. Visa's had 20% earnings growth, 10% sales growth annually for the last several years. And look at the stock, up 33% this year. Elsewhere, today, mobile payments, they're growing fast as well. PayPal rallied, 8% today on its strongest quarterly results in at least a year. Mobile payments seen huge growth. PayPal's Venmo payment volume up more than 60% over last year. There's the closing bell, basically flat on the Dow. 3M was a drag all day, but once again, the S&P 500 rally going into the close. 3,009, we are only 16 points away from an historic closing high on the S&P.
Welcome to the Closing Bell, everyone. I'm Wilfred Frost. And I'm Morgan Brennan, in for Sarah Eisen, along with Mike Santoli, CNBC Senior Markets Commentator. We are in the market zone. You can see the day's market action on the right side of your screen, with the stories still coming up on the tabs at the bottom of your screen.
Let's check in on how we closed. As Bob said, a nice little rally in that final hour or so of trade, taking the S&P 500 to 0.2% of gains. The Dow still just below the flat line. The NASDAQ and the tech sector more broadly led the charge, up 0.8%.
Tech stocks were the big gainers today, up 1.5%. It is the busiest day of earnings season, and coming up we'll get results from Amazon, Intel, Gilead, Visa, and Alaska Air. Joining us to talk about the market day, though, Stephanie Link, head of global equities research at Nuveen, is still with us, along with Tim Lesko, principal at Granite Investment Advisors. Good afternoon to you both. Mike Santoli, I'll start with you. The fact that we not only ended off the lows of the session, but mixed picture. I mean, S&P up 30.10 is the level.
And the NASDAQ closed at the highs. So, I mean, I think if you looked at that chart of the intraday, the dip buying instincts were very much in play. Every time we went negative on the day for the S&P, it got picked up. I think in general, the message has been the market is firm, it's steady, it's looking for areas of traction, kind of declining some bigger opportunities to pull back more sharply. So I think that's all to the positive. Although today, again, the reason the indexes performed was the stocks that people had been rotating out of, which is the very big tech growth software stocks, did have a little bit of a comeback.
Tim, what's your take as to overall level of bullishness right now?
Well, I think what you're seeing is that there was some pretty big bearishness across the cyclical industrials, and the stocks traded pretty well because a lot of bad news has been priced in. Yeah. And then when you get good news from a bellwether like Microsoft, it really starts to drag the market up.
Stephanie, your thoughts on the NASDAQ and some of the big moves, or I guess I should say outperformance we saw there today?
Yeah, I mean, good earnings are getting rewarded, and these have been beaten down. They've lagged over the last month as value has outperformed growth. What's also interesting, though, Morgan, you probably noticed this as well, is the defense stocks actually acted very well today. Northrop Grumman missed the number, fell 3%, and now is up on the day, right? So they want to, and that defense stocks trade kind of with the growth stocks, if you will. So that makes a lot of sense. But obviously there was a lot of dip buying in defense today, for sure.
Yeah, and I was going to say, and certainly just to finish off on this really quick, and certainly when you're talking about weakness in industrials, and especially names like 3M, the one pocket within the industrials that has held up and where manufacturing continued to be strong and revenues continue to grow is some of these defense names.
Absolutely.
We should mention we're waiting for that full breakdown on Amazon earnings. The EPS does appear like a significant miss. We've got an after-hours move, about 5% to the downside on Amazon. We will bring you the full breakdown any minute now. As we said, the EPS does look a little behind. Mike, back to the broader markets. There's been some help from overseas for once,
for sure,
in terms of the positive
That's
momentum.
part of the backdrop. I mean, the German equity market kind of breaking out. Obviously, yields lifting a little bit overseas, as well as emerging markets doing better. So there's been this attempt to say we're emerging from that growth scare in the late summer, and all the capital markets are sending that message. We'll see how it plays with this number here.
You can see Amazon down 6%. Josh Lipton's been diving into the numbers for us. He has a breakdown on Amazon. Josh.
Well, Amazon reporting here EPS of $4.23 versus expectations of $4.62. Revenue $69.98 billion. The street was at $68.8 billion. Turning ahead to the Q4 guidance, they're guiding between $80 and $86.5 billion. That is light versus expectations. The street was at around $87.4 billion. AWS revenue $9 billion, up about 35%. Guys, back to you.
Okay, thanks so much, Josh. 35% AWS comparing to Azure yesterday, 60% year-over-year growth. But Mike, we're clearly revenue essentially in line. Big EPS miss. Yeah. Maybe the revenue guide there a little bit soft as well. Just diving down in.
I think the revenue guide is the eye-catching thing. Now, the backdrop is the line forever has been Amazon is usually pretty conservative about guiding revenue. And in fact, it's a ridiculously wide span if you think about it. $6 billion. We're already a month into the quarter that they're now guiding. So to me, that's not a positive for sure. But AWS decelerating and missing on the top line is probably also weighing on the stock.
Tim, your initial take on the numbers that we're getting here? 35% growth for AWS. Do you think ultimately it'll be good?
Well, I think there are a lot of businesses out there that would love to have 35% growth, so maybe it's a case where expectations got a little high. However, AWS is the cash cow that continues to fund the rest of Amazon's growth and low-margin businesses. So at the end of the day, they're going to need to start showing some earnings, and this is clearly a margin compression that we have to look into.
Mike, I know we don't typically focus so much on the bottom line with this stock, but after a quarter of WeWork, after a quarter of those types of issues, does that start to be more of a factor for them, or are they still many years away from having to have a reasonable PE multiple?
I think they've shown that on a cash flow basis, they can dial it up and down enough that there's not a concern that the model itself is broken. It's about pace of investment and things like that. So I don't think it's really about the EPS miss as much as it is, AWS kind of maxed out. Is that now a much more competitive market? And that changes the complexion. It also changes the multiple the market is willing to assign implicitly to the cloud business inside of Amazon.
That AWS growth softer than Microsoft's cloud growth yesterday. Of course, Microsoft performed very strongly today, and the market was up about 2%, leading the tech sector higher. We've got another earnings report for you out in the tech space. It's Intel. John Fort's got it for us. Hi, John.
Hey, Will. Yeah, this stock is up some 6% after hours, and that's because they've got a beat on the top and bottom lines. Intel turning in revenue of $19.19 billion versus $18.05 expected, turning in non-GAAP earnings per share of $1.42 versus $1.24 expected. Also, on the guide into Q4 of $19.2 billion. It's about the same as this quarter. That's a little bit better than analysts expected. Also, earnings per share of $1.24 versus $1.21 expected. Intel also raises its full-year outlook to $71 billion on revenue. That's up $1.5 billion from where they were in July. Also raising to a $4.60 non-GAAP EPS. Intel's board also approving $20 billion additional to set aside for stock repurchases. In the quarter that they are reporting now, they did use $4.5 billion for repurchase. Now, I know Stephanie Link was looking at the data center group to see how it was going to do this quarter. Pretty much every group that I can see outperformed, but data center especially, $6.4 billion in revenue for data center here, and the client computing group, personal computing also slightly higher, but data center, we only expected maybe, or analysts did, I should say, about $5.6 billion from that group, turning in 6.4. Pretty good. I will be talking to Intel CEO Bob Swan after the call. You can look for that in Squawk Alley tomorrow, guys.
Yeah, we are looking forward to that, John. Stephanie,
good.
The numbers.
Really good. Really good across the board. I mean, data center is telling me that CIOs are spending a little bit more, right? I mean, they actually really decelerated the last couple of quarters, so that's a very good sign. But even PCs, we expected that to be good, and that was better than expected. So they have a lot of cash. Stock is cheap at 11 times. I can see why it's up. It's also lagged the growth.
Mike,
only up 10%.
6% moves in opposite directions, or 7% now for both Amazon and Intel. Talk to us about the setup for each stock coming in.
Yeah, I mean, Intel has been a little bit, it's been range bound, but well below its highs in the high 50s, hit twice so far in the last couple of years. So it seems as if expectations were pretty modest on Intel. I mean, I thought Amazon had relatively lower expectations as well, just based on how the stock had really not gotten much altitude. Obviously, the market was expressing some kind of concern of what was manifest in AWS business. What I find interesting, of course, we have no idea how it's all going to wash out, but the overall market, like the S&P ETF, is not really showing like it's going to have much of a reaction to the Amazon miss and the stock going down. So we'll see if the overall tape can continue to absorb the noisy earnings report.
We'll see if growth can outperform value like it did today, or does it reverse? I mean, it's like been a daily thing. It's nuts.
Exactly.
Tim, your initial take on these Intel numbers. I mean, you've made the point that this is a stock that has looked cheap for some time. What are you looking for in the report and also in the call?
Well, certainly the stock has been perpetually cheap, trading at a low teens multiple at best, and it's really considered old tech. And the street really made a mistake about 16 months ago when it assumed that all of that server business was going to go to AMD because AMD was making a thinner chip. So what we're really seeing is that these are long-term contracts, and Intel is still the behemoth in the business. So this is a really good report and really sets the stock up as it moves past $52 a share to get out of that range that Mike was talking about. So we're pretty bullish on the call, and we also want to hear on the earnings call what they're talking about for capital expenditures. Because that's really the next leg in this, is how much money do they need to spend to stay current.
All right. Mike Santoli.
The one thing I was going to add with regard to Intel is the way the semis today bounced back from the miss of Texas Instruments yesterday. So that was a net positive that the whole group did not decide that it was kind of game over for this phase.
I think a lot of Texas Instruments was Texas Instruments specific.
That's the way it seems.
Yeah, right? I mean, so that's why they bounced. And then Lam had a great number and a couple of others as well. So it was very encouraging.
We got more earnings out. Gilead. Meg Terrell has the numbers for us. Meg.
Hey, Morgan. Well, basically inline quarter for Gilead in the third quarter. On the bottom line, coming at 1 cent ahead of estimates at $1.75 versus analyst average estimate of $1.74 in adjusted earnings per share. Revenue came in at $5.6 billion versus analyst average estimate of $5.61 billion. But for Gilead, of course, it's all about its different drug franchises, HIV and hepatitis C. On the big HIV drug front, basically in line, $4.2 billion for the quarter versus consensus of $4.19 billion. Hepatitis C drugs, though, they came in pretty light, $674 million for the quarter versus $729 million analysts were looking for. As for full year guidance, company raised the bottom end of the range that they're looking for, up now to $21.8 to $22.1 billion. They just raised it by about $200 million on the bottom end of that guidance. You are seeing Gilead off by 1.5% there, perhaps on the miss on the hepatitis C revenues. One drug, Biktarvy for HIV, also came in just a little bit light. However, HIV drugs overall did meet consensus. Well, back over to you.
Meg, thanks very much for that. Broad final comment, Steph, on earnings today. What are you taking away from this? That value growth debate?
Well, it's value growth debate, but it's also stock picker market. Really, truly, you got to get them right. Otherwise, you're going to get your head handed to you, right? I mean, Lam Research was fabulous. Twitter was horrible. So let's just see if this continues, if the reactions are what they are, if you get rewarded for picking the ones that win versus the ones that actually miss.
7% moves in opposite direction for Amazon and Intel, the big story here for earnings. Tim, Stephanie, thanks so much for joining us. Great to see you both.
Thanks for having me.
Up next, we'll have much more on Amazon's earnings. Keep it right here. Closing bells back in 90 seconds.
This CNBC program is...
Fall in love with the brand new iPhone 11 at Tesco Mobile. Take amazing photos with Apple's best ever ultra-wide lens camera. You can get the iPhone 11 for just $37.75 a month with no additional upfront costs. What's not to love? Search Tesco Mobile or visit us in store. Tesco Mobile. Every little helps.
36-month credit agreement, rolling monthly usage contract. Subject to status, phase policy applies. See tescomobile.com/terms.
Swing and a line drive, base hit into right field. Way back goes this one. It's got a chance. It's going, and long gone up onto the railroad tracks. Welcome to the World Series.
The excitement of the Fall Classic is here, and you can hear every call of the 2019 World Series on TuneIn Premium. The action continues this Friday with Game 3 between the American League champion Houston Astros and NL champion Washington Nationals. Listen live at 8 Eastern as two of Major League Baseball's most storied franchises look to bring home the World Series title. The 2019 World Series is on TuneIn Premium. College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
All the way to the checkerboard. Touchdowns.
Despite the loss last week, the Badgers still control their Big Ten destiny. Wisconsin will face a formidable opponent as they try to get back on track with the undefeated and third-ranked Ohio State Buckeyes this week. The action starts at 9 a.m. Eastern this Saturday. Just search college to listen today.
Welcome back. Amazon earnings just out. The stock taking a big plunge after a miss on the EPS line and a disappointing guide on revenue. This quarter's revenue was slightly above estimates, however. The company trading lower by 8%, as you can see. Let's bring in two analysts who cover the stock. Tom Forte from D.A. Davidson and Brent Thill at Jefferies. Tom, I'll come to you first. Your immediate take.
So my immediate take is that the pressure on earnings in the third quarter was likely a reflection of their ramp of one-day shipping and also their content spending for Amazon Prime Video. The softness in sales guide for the fourth quarter may be partly due to the fact that you have a late Thanksgiving So the time between Thanksgiving and holiday is compressed. Otherwise, I'd be looking for more details on the earnings call on the fourth quarter sales guide.
Brent, your own take?
Good Q3, bad Q4 guide. Again, the big investment in one-day deliveries really weighing on the story. There's no way they can offset these expenses. It's manual. You can't deliver packages any quicker or more efficiently. So many of the logistics experts continue to point to short term, there's a big investment mode. Amazon was going through harvest mode, showing earnings upside. Now we're back into investment mode. And I think many investors are saying, wait and see until they get out of this investment mode for these current investments to pay off. Remember, typically Amazon's pretty conservative. They did beat the top line and bottom line this quarter relative to our numbers, but effectively they've always given pretty conservative guidance. So our belief is that they'll surpass what they typically say, but that's going to continue to weigh in the short term given the investments they're making.
Tom, 35% growth in AWS represents a deceleration. How concerned are you about that, and what does it mean for the competitive landscape in cloud?
So I definitely think you're seeing better performance out of Microsoft and then to a lesser extent out of Google. So it is a tougher competitive set for cloud. On the profit side, though, they still had more than $4 a share in earnings. And the three big profit drivers besides AWS is one are advertising and mix of third-party retail. So yes, the deceleration sequential for cloud is concerning, but it's still a big profit driver along with third-party retail and advertising. And you still had $4 plus a share in earnings.
Brent, in terms of the advertising numbers, and I realize we're still kind of combing through and getting all the details here, and we'll see what happens on the call, but how important are the advertising numbers moving forward as well, especially if you are starting to see a more sustained deceleration in cloud?
Well, one, I don't think there's a massive deceleration in cloud, so I want to be clear about that. They are the overwhelming majority leader. They are laps ahead of anyone else, okay? To make that clear. Two, advertising is really important because as more people sell online, they have to actually advertise to get their products well known. And so we think the advertising business is early, but is going to be in great shape over time. And we've spoke to many advertisers that are saying they're seeing a massive return on this investment. And I think you're going to continue to see those that don't even sell on Amazon begin to advertise on Amazon. I got a Jeep ad the other day. And last time, I don't think I'm going to buy a $25,000 Jeep through Amazon.com, but it'll direct you back to their site. So I think this is a really important way that they're going to diversify their business and effectively can sell other things than just shampoo and bar soap and going into automobiles and other expensive items as we've seen some of the advertising coming through on the system.
Brent, what's your top question ahead of the earnings call that you need to see answered?
They've been overspending on the one-day delivery. So last quarter, they guided over $800 million in one-day investments. They said they exceeded that. I think the big question is on the guidance again. They effectively torched the guide relative to where the street's at. So how much is going to one day? Where's all the other dollars going? Is I think going to be on investors' minds right now. The bottom line is the biggest concern at this point.
Brent, Tom, thanks very much.
Thank you.
Visa earnings are out. Kate Rogers has got them for us. Kate.
Hi, Wolf. Well, there are beats across the board here for Q4 Visa reporting. EPS adjusted $1.47. That is higher than the estimates of $1.43. Revenues coming in at $6.14 billion. That is also higher than analyst estimates. Payments volume up 9% year over year. Processed transactions also up 11% year over year to $36.4 billion for the fourth quarter. The company also announcing a quarterly dividend increase of 20% to 30 cents per share. As you can see, the stock is higher by more than 1.5% right now. The conference call kicks off around 5 p.m. and we'll bring you guys any updates as we get them. Back over to you. Kate, thank you. Mike, what do you think? Stock's up about 2% right now? A lot of ups.
2%, yes. Up 2%, been a great performer, of course. The reason that a Visa has a close to 30 times price earnings multiple is because of steadiness and predictability. And so they delivered on that. I think the only question really is surrounding not so much the macro or how they're executing, but whether the stock just becomes too much of a consensus kind of darling. And it shows at times that it has a risk of doing that. But the response here shows it's still a few bucks to the all-time high of 187.
Up 2% for Visa. Of course, the big ones, Intel, Amazon, moving in opposite directions to the tune of 7 to 8%. Intel higher, Amazon lower. Up next, we'll break down Alaska Air's latest earnings and the state of the industry when we speak exclusively to the carrier's CEO.
Plus, tech under fire. Recode's Kara Swisher grades how top tech CEOs are handling antitrust probes. That's coming up on the closing bell.
Fall in love with the brand new iPhone 11 at Tesco Mobile. Take amazing photos with Apple's best ever ultra-wide lens camera. You can get the iPhone 11 for just $37.75 a month with no additional upfront costs. What's not to love? Search Tesco Mobile or visit us in store. Tesco Mobile. Every little helps.
36-month credit agreement, rolling monthly usage contract. Subject to status, phase policy applies. See tescomobile.com/terms.
Far wing elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
The sideline, the man fleet for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the
Search
right.
NBA today to start listening.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
All the way to the checkerboard. Touchdown.
Despite the loss last week, the Badgers still control their Big Ten destiny. Wisconsin will face a formidable opponent as they try to get back on track with the undefeated and third-ranked Ohio State Buckeyes this week. The action starts at 9 a.m. Eastern this Saturday. Just search college to listen today.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn. Hey NFL fans, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can hear every NFL game live as it's happening or catch it later on demand. Anytime, anywhere, all season long.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
Welcome back. Another earnings alert. Alaska Air. Phil LeBeau's got the results for us. Hi, Phil.
Well, much like we saw with Southwest and American earlier today, they are beating the street. Alaska Air is for the third quarter coming in well above expectations, earning $2.63 a share in the third quarter. The estimate was for $2.52 a share. Revenue coming in slightly above expectations at $2.39 billion, and its revenue per available seat mile. That's a key metric to focus on. It's slightly higher than the previous guidance from the company, up 4.5%. Previously, they guided for an increase of 4.4%. Guys, I know you're going to be talking to Brad Tilden in a few minutes. I would be curious what he has to say about the situation with the 737 MAX. In particular, you know, they have some on order. They haven't been affected so far. There are none that they're flying so far, but it has been part of their plan for the second half of 2019 going into 2020.
Phil, that is the perfect lead-in. Thank you for bringing us those numbers. For more on the results, let's bring in Alaska Air CEO Brad Tilden, who joins us now by phone. Brad, thanks for being with us. And let's start right there. The 737 MAX, as Phil just mentioned, you don't have those in your fleet, but you did have them on order. How closely you're watching the situation, and what does that mean for those future orders?
We're watching it super closely. We did not have any MAXs in our fleet at the time they were grounded, but we should have had 3 delivered by now. We've got 7 or 8 coming next year, so we're watching it very closely, just like everybody else.
Well, talk us through this quarter's numbers, Brad. Clearly, the share price slipping a little bit, despite a good quarter backwards looking. Are you giving out some guidance that might be a little soft?
No, I'm not sure what I'm not sure what you're seeing, but we actually felt really, really good about the quarter, and we felt good about our guidance going forward. Our RASM was up 4.5%. We think that'll lead the industry, and our margin, pre-tax margin, was 17.6%, almost 18%. We think that will lead the industry, and we're actually feeling quite good about our network, about our revenue production, and my own sense is that our guidance was going forward was fairly positive.
And Brad, just to dig into the revenue per available seat mile, the RASM numbers a little bit more, what is driving that? And I guess based on that, what is your read-through on the state of the consumer right now?
I think, as you guys know, we were bought Virgin America. That sort of gets you focused on that stuff, but that's behind us now. So our commercial team is just doing an amazing job. I think what drove the unit revenue improvement is network redeployments, getting the right airplanes in the right market. We're doing some things with the fares, particularly with the first-class cabin and premium economy. We've rolled out saver fares, which has been hugely beneficial. And so those are some of the primary drivers.
Brad, talk us through ending the partnership with American in terms of code shares and alliance points.
Yeah, these things move around a little bit from time to time. What's happened is Alaska, we've grown 7% a year for the last 20 years, and we've grown more than that for the last 5 years. And so you start without much overlap with these partners, and then you end up having a lot of overlap, and so people see the value equation differently. We don't see much, if any, impact from the loss. Honestly, it was 3% of our mileage plan awards were on American metal, and at this point of our route network, where our customers are going, we have 90% ability to serve them ourselves. So and candidly, while we had the American relationship with American, it had sort of dwindled down even inside the relationship. So we see the impact as pretty minor going forward.
Brad Tilden, thanks for joining us on the heels of this earnings release from Alaska Air. Stock is trading right around the flat line right now in the after-hours trade.
Thanks very much.
Up next, Recode's Kara Swisher weighs in on Facebook CEO Mark Zuckerberg's performance on Capitol Hill. Stay with us.
I've always been fascinated by...
Fall in love with the brand new iPhone 11 at Tesco Mobile. Take amazing photos with Apple's best ever ultra-wide lens camera. You can get the iPhone 11 for just $37.75 a month with no additional upfront costs. What's not to love? Search Tesco Mobile or visit us in store. Tesco Mobile. Every little helps.
36-month credit agreement, rolling monthly usage contract. Subject to status, phase policy applies. See tescomobile.com/terms.
Hey, you. We didn't make Nature Valley Crunchy bars so you could just sit and scoff them in front of the TV. Not when you could be enjoying them outdoors. Up here! Race it to the top! With 100% whole grain oats and delicious honey. Nature Valley Crunchy. Get out more.
John's just napping after a successful NEOP. But when he wakes up again, it won't be to an unexpected bill. Because unlike some insurers, Vitality Health Insurance includes our full cover promise as standard. So we'll pay for all his inpatient and day patient consultant fees in full. Isn't that right, John? We'll come back later.
Time to review your health insurance. Just search Vitality Health. Vitality. Positively different. Your consultant must be recognised by us and the condition and treatment eligible under your plan. Minimum monthly premiums, terms and conditions apply.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Rachel Martin with David Green, and this is Up First from NPR News.
And it's defined like this.
Ladies and gentlemen, welcome to the show.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
It's Liz Hernandez with your TuneIn Music News Update.
Nick Jonas tells Rolling Stone magazine that the big reason the brothers broke up in 2013 was because of the music. Nick says, "We were making music that I don't think we were all super proud of, and we should go on our individual journeys." Meanwhile, Billie Eilish doesn't care for people who wear mink. She tweeted, "Just so you know, you people getting mink lashes and mink slippers disgust me, LOL." To hear music from the Jonas Brothers and Billie Eilish, search today's hits on TuneIn.
Welcome back. Let's send it over to Mike for the third installment of the dashboard. Hi, Mike.
Hello. Well, let's see where the pendulum that swings between fear and greed sits right now. Take a look at some sentiment charts. First, the Individual Investors Retail Survey, the American Association of Individual Investors. We look at this a lot. For much of August and September, I pointed out about how, people were pretty bearish up here. Low bullish readings and high bearish readings. It's bullish and bears. Now it's actually recovered back to more normal levels. I would call it neutral right here. So you have bulls back toward the historical average as well as bears. So you say it's not really a clear signal. Only when you get to extremes does this matter. There's another way of gauging this by market-based dynamics. This is the CNN Fear and Greed Index. This is a lot of market-based measures of behavior of the actual parts of the equity markets and credit markets. Again, I'd also call this neutral, right? It's a little bit on the higher side, but this is when you see it's a fat pitch when people are too negative and too panicky. So I would say no real edge from this, but it's harder to argue that everyone is, quote, too skeptical or pessimistic right in the short term just now.
Yeah, it's good perspective, though. Take a look at these charts. Mike Santoli, thank you. It's time now for CNBC News Update with Sue Herrera. Sue.
Hello, Morgan. Hello, everyone. Here's what's happening at this hour. Pete Buttigieg, campaigning in New Hampshire, says being increasingly targeted by other campaigns means he is gaining ground in the Democratic presidential race.
Like any campaign, we make sure that we anticipate any attacks that might come our way. I guess we're doing well because it seems like there's a little more heat coming toward us, and that's an indication that we've advanced, and I'm sure there will be more. The more we succeed, there will be more pressure, but we're ready for that.
According to a media report, Popeyes will start selling their popular chicken sandwich once again by early November. Sun Holdings, which operates about 150 Popeyes locations, will start offering the sandwich in Florida and Texas. When it was originally released in August, Popeyes ran out of chicken and sold out in just 1 week. And the public paying their respects to Representative Elijah Cummings, who is lying in state in the U.S. Capitol, where he served for 23 years. Cummings died last week at age 68 from complications related to long-standing health issues. You are up to date. That's the news update this hour. Wilf, I'll send it back downtown to you.
Okay, Sue, thank you very much for that. Now, Mark Zuckerberg, the CEO of Facebook, was grilled on Capitol Hill yesterday, highlighting a number of controversies surrounding the company, from backlash over political ad policy to the reportedly unfavorable conditions that Facebook's content moderators work under.
Would I be able to run advertisements on Facebook targeting Republicans in primaries saying that they voted for the Green New Deal? I mean, if you're not fact-checking political advertisements, I'm just trying to understand the bounds here. What's fair game?
I don't know the answer to that off the top of my head. I think.
So you don't know if I'll be able to do that?
Would you be willing to act as a content monitor? To have that life experience?
I'm not sure that it would best serve our community for me to spend that much
reclaiming my time, Mr. Zuckerberg.
I spend a lot of
reclaiming my time. Mr. Zuckerberg, are you saying you're not qualified to be a content monitor?
No, Congresswoman. That's not what I'm saying.
Okay, then you're saying you're not willing to do it.
Here to talk more about Zuckerberg's performance, plus some of these massive tech moves that we've seen in earnings reports this evening and this week, is Kara Swisher, Recode co-founder and editor-at-large. Good afternoon to you. Thanks for joining us. Do you think there was a lot of heavy punches landed on Mark Zuckerberg yesterday? Or?
Yeah, I think they broke it down to very simple terms. I mean, I think these issues are complex. I wrote about this in the Times today. These are very complex issues, and Facebook has tried to make it binary. You're either for free speech or against it. You're either for, it's just they try to make it simple, and they're not simple. And I thought what these two congresswomen did was actually break it down in real terms. Would you work as a content moderator because it's such a terrible job? Why wouldn't you? Can you place ads with lies? They were very simple questions to very complex problems.
The interesting thing I find about that is that it's much more focused on the debate about whether Facebook should be classed as a publisher and responsible for the accuracy of the posts, as opposed to what usually is in the crosshairs most of the time, which is antitrust, are they too big, or privacy. This is a separate debate that tends to get less focus.
No, it's all systemic. It's a systemic thing of the power of this platform to control media, to control communications, and what responsibility it has and what responsibilities it doesn't have, and what guardrails should be put in place. It's the same debate about the size of this place, run by one single person in a dual-class system. who makes all the decisions. And so they went right to the guy and asked him the tough questions, and it was great. I thought it was great.
It certainly seems like after 6+ hours of testimony, I mean, this is a company that has a credibility issue. We've certainly talked about it over and over again on our air. The Libra piece of it specifically, the reason he was actually testifying in front of this committee, do you think he made, a viable case here? Would you expect to see Facebook and the Libra Association move forward with some sort of coin?
I think it's going to be a lot less so. You saw all those payment providers coming out, and so it's a difficult thing for Facebook to wade into currency or whatever it is. It's not really currency. It's not really cryptocurrency. It's a tough sell right now. It's, I think probably the only tougher sell is Facebook dating, right? It's the trust issue, which Mark Zuckerberg talked about in the opening thing. People don't trust us. And that's an astonishing thing for a CEO to have to say. And so they have to rebuild trust, I think, before they move more aggressively and do some things and be subject to some regulatory scheme work.
But do you think that regulatory theme work is likely to come anytime soon? I guess that's what I was asking earlier. Well, there's a lot of focus on it, and perhaps there was some good punches landed, but we don't really ever see any action in this space.
Well, that's not the case. This has been the toughest time there, and it's a series of things that are going to happen. And I think someone like Jan Schakowsky of Chicago is working on the privacy bill. There'll probably be some sort of privacy bill that Facebook is subjected to. Over at the Justice Department, Makem Delrahim is working on an investigation. FTC is having an investigation. These things take time. They have to collect information, but the wheel is spinning. It took a long time for Microsoft to be subject to finally the lawsuits and things that happen.
When you say that he suggests it's black or white, right? Either free speech or binary. Not. He's saying it's too hard for us to be the ones to draw some kind of line in there or the shades of gray. Where do you think, how should they approach that?
Well, all there are shades of gray. They'd like to make it black and white. Like, if you're not for Facebook, you're not for free speech. It's like, what? No, you know what I mean? Like, if you get drawn into a conversation like that, it's too binary. And they love binary in Silicon. They like ones and zeros. This is not a ones and zeros argument. And the question is, maybe they shouldn't. Maybe we should have that debate. Maybe all of us as citizens should. But this is one company that controls billions of people run by one person. That's got to raise some flags for everybody. And if it doesn't, it does for me.
I wanted to squeeze one more in around WeWork, and not focus on WeWork itself, but on the Vision Fund and SoftBank. How much pressure do you think they're under? Do you think there's a major potential blow-up around the corner for the Vision Fund and SoftBank itself?
They've lost a lot of money. This was a face-saving move on their part, to do this and cram everybody down. It's even more than a cram down. I don't even know what to call it. It's not a restructuring, and the money they gave to Adam Newman's going to be subject to lawsuits, that's coming. So this is a long, horrible slog, unraveling real estate commitments, all kinds of things. I wouldn't be surprised if it eventually moved into bankruptcy. I don't know. It's a tough business, and they had to sort of save it for now. And they're the lender of last resort, it seems like, in this situation.
Kara, great to see you. Thanks so much for stopping by.
Thank you very much.
Kara Swisher. Up next, Amazon shares sinking while Intel jumps. We will dig deeper into the barrage of earnings hitting Wall Street in After Hours Trading. We're back in a couple minutes.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
Fall in love with the brand new iPhone 11 at Tesco Mobile. Take amazing photos with Apple's best ever ultra-wide lens camera. You can get the iPhone 11 for just $37.75 a month with no additional upfront costs. What's not to love? Search Tesco Mobile or visit us in store. Tesco Mobile. Every little helps.
36-month credit agreement, rolling monthly usage contract. Subject to status, phase policy applies. See tescomobile.com/terms.
Far wing, elevates, triple bucket.
The war of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
To the sideline, the Van Fleet for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Pump fake in the lane, turnaround jumper from 8 feet is good on the
Search
right.
NBA Today to start listening.
These are the top buzzing stories on TuneIn.
Michael Douglas's son Cameron talks about how his daughter helped him turn his life around after jail.
It's a whole new depth of love that I never even realized I had within me. And also, you see your parents in a little bit of a different light, right? Because now you can really kind of relate with them. So it's a whole new level of respect.
Sarah Jessica Parker reveals her nickname.
Most people call me SJ. It's a huge amount of time I'm asking to say my entire name, and I don't want, who knows if I'm even deserving at the beginning of a relationship.